Good evening, ladies and gentlemen. Chris Ryan's in live chat. Frankie James is in live chat. Welcome to the very first Commodity Confidential live stream. The markets are getting ready to open in a couple of moments. Got a warning already, so let's open studio. And that should already be, there we go. We've got a little bit of a time lag. But Chris Ryan in live chat says, I think we'll have an interesting week. I agree, mate. I agree. It's just when that interest is going to start. Over the weekend, both gold and silver have both been trading. Now, why is that microphone gone ever so loud? I've just got to make an adjustment to my microphone, so apologies. Just got to bring that down ever so slightly. It's because the settings are different, so just bear with me. Fingers crossed we won't blast your eardrums out. Testing, 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 testing. 1, 2, 3. Hopefully that's a little bit better.
Chris said it's good his side.
Nice one, Chris. Thank you for that. Just turn that heater off. This shed's getting, sorry, state-of-the-art studio is getting rather warm. I've insulated it to within an inch of its life. Yeah, gold and silver both been trading over the weekend on the grey markets. Silver stopped trading on the weekend markets around, it was around $78.11. So at the moment, spot silver closed out at $77.38. So we could be, it looks like we might gap open in a few seconds' time. Anybody who's looking at the May silver contract, don't worry that it's dropped down to 75.88. It always does that before the open and it'll bounce back up. Here we go. So yeah, May silver contract, that has opened and it's gapped up as well. It's just bouncing around VWAP now. No doubt spot silver's going to follow that move. The thing is, tonight, it's going to be one of two things. They're either going to come out of the starting blocks and start driving silver down, or they are going to suck retail in, suck the longs in, make it look as though the move up is why the Shanghai is not online, the Comex is not online. Don't forget, no Comex trading tomorrow for the futures markets. It's a holiday in the USA. Is there enough firepower in the grey markets to drive this price down? You'd better believe it. Don't believe in all this low liquidity, low volumes on grey markets. If the traders want this price down, the brokers will be in there and they will drive that price down. They can also manipulate it upwards as well if they want to. So the fact that Comex is in theory closed, don't let that put you off thinking we could have a move in either direction. I still think we could have a move up just to suck people in. But I am convinced this week, why the cat's away, the mice will play. I use the analogy, when you're a teenager and your parents go out, you misbehave, don't you? You get them beers in, you get your mates round, you have the music on. Dance round your handbags until half an hour before the dudes come home. Then you clean up, kick your mates out, and it's like nothing's happened. That's what they're going to do with these commodity markets. I'm pretty convinced they'll bring us back to where we were when Shanghai went on holiday. Looking at VWAP now, still waiting for spot silver coming online. That normally takes about 5 minutes. So about 11:05 that'll come online. Spot silver VWAP's at $78. Top of the Bollinger on the hourly is 79.28. Bottom of the Bollinger is 76.66. So you've got quite a bit of movement either up or down. That move down now to, it's going to come down to the bottom of the Bollinger. I don't think this is the move down just yet. Could be proved wrong. I mean, look at that. From 70 from $76 almost up to 78. That's what, look at that for volatility. Look at that volatility. Now, do we put a cheeky little buy in there and just see if we can, let's put a little unit in, see if we can get it to gap up. See if we can make, what can we, just a little unit, just a little unit. There we go, a nice £173 profit there. Will it go again? Let's make here why this volatility is there. Why are we down at the bottom? A nice gap up would be ideal here. Sorry, I'm not talking, I'm just looking at this. You can maybe see it over my shoulder. We're not going to move. We're not moving up as quick as I'd like on that one. But that's a nice start to the evening, isn't it? It's just hovering around 76, sorry. We need it to shoot back up towards 78 again. Don't need to go big at this stage with any units. Just try and make a little bit of, help a little bit of profit to start the week. Make some use of this volatility. What's that? That's $3 or $4 swings. If it can move up now to, where are we at, 75.93, get back up to towards 77.50, something like that. That's a quick 350, 400 quid, isn't it? What's that, about $10,000? I shouldn't joke. The dollar has been, it's been holding steady lately. We're just waiting for spot silver to come online. And we've got a few seconds before it does. I'm pretty sure once it does come online, it'll gap up. Hopefully it's going to take the May futures contract with it, and then we'll settle down back around $78 and see where we're going from there. I'll be surprised if they come straight out of the starting blocks, driving silver down. They'll want more liquidity in the market before they start that move. They've got, in theory, 9 days to do this move till Shanghai comes back online. In theory, you've got four full days, because like I said, the Comex is closed tomorrow. So liquidity is probably going to be low, volume's going to be low. Just dropping down towards $75 now. Still no movement in the spot market. That should be coming online. I think it's normally 5-10 minutes after the open. So there'll be some, there might be some pre-spot positioning taking place. Because if the futures contract stays where it is now, that spot price on the open may shoot up and then drop straight down. There we go. So silver's opened up at, spot silver's opened up at VWAP 77.08. Gold's also opened up at VWAP $5,018 an ounce. I've got a feeling that May futures contract, we got in there at 75.75. I've got a feeling if spot silver doesn't come down now, that's a big arbitrage at the moment. A big arbitrage. Futures is at 75.75. Spots at 76. 77.04. There's a big spread. Big spread on that spot silver. Grey markets over the weekend, spot silver was spreading at around $75, which is a little, there's a move down now from spot. So it was a big spread. It's normally 100 cents or $1. Over the weekend it was 75. So this is just a little bit of positioning maybe from the close of play on Friday. A close over the weekend. I'm just waiting for that quick move up. We made a quick, can't remember what we made on that one. Market opened at 11. In 3 minutes, we made £173 just through catching that volatility. All right, 170 quid. It's not going to make you a millionaire, but as you're looking at, if you're looking at this, where my cursor is, look at the futures contract. You can see the volatility. It's kind of died off a little bit. Spots come online. Gold doesn't know which way it wants to go at the moment. And that's because there might be a little bit of a void in the market. Something that's going to be interesting in this first hour, and it could be quite telling, what are the volumes going to be? What are the volumes going to be on this open? If we start getting towards, on the hourly, 6,000-7,000 contracts trading, that means people are in the markets. They're not waiting for tomorrow's holiday and let's come back in Tuesday and see where we're at. People are doing what we're doing. And I'm talking about brokers, traders. I don't think anybody will be sleeping tonight. Chris in live chat, he says, ouch. I take it that's on the move down, mate. Are you trading the futures contract? Are you on silver or are you on spot? Don't forget as well, this month we've got on the 27th of the month, the March futures contract closes out. So around 6:25 on the 27th, be real careful because there could be some quite odd moves, some real odd moves that don't make sense, but it's just going to be positioning as people either roll out of the contracts, they move over. Brokers maybe will be closing out automatically and rolling the contract for retail. So just something to be aware of. Something else, two things I want to talk to you about in a minute. First thing is going to be about what Russia did last week, allegedly. Bloomberg and Reuters up to their old tricks again. That was when we had the big drop down at 4 p.m, right when the liquidity is transferring from London over to the US of A. Perfect timing. We'll talk about that in a moment. Chris says futures, but I'm not in a trade at the moment. Don't blame you, mate, at the moment. Just see. I mean, I can't give any advice. That's why the disclaimer comes up. I'm not FCA approved. Everybody should do their own due diligence. Don't listen to Jimmy James. I am a fool. I just make my own trades and give my own opinions there. That's alongside the disclaimer. Yeah, I'm just waiting for that big move. In fact, I should be on there hovering already, waiting for that. I'm just waiting for that big move up back towards the 20-day moving average, which is around $78. That'd give us another couple hundred pounds to the kitty. Do you know, I was working it out, and on Friday I said, if this week goes the way I think it will go, it could be a £1.8 million profit week. That's kind of doing the maths in your head. Was a little bit overestimating there. It could be around 1.2, 1.4, which we'll still take. That'll be a cracking month. Let's make the most of it. When the markets plays silly buggers, you can't beat them. Join them. That initial burst of volatility has kind of died off a little bit now. Gold is showing positive on the hourly candle, but that's because it opened at VWAP. So it's anything up until $5,040 per troy ounce. If it's showing a green candle, it's kind of a little bit of a red herring because it gapped down on the open. When the silver futures contract opened, that actually did gap up because we took that lead from where the grey market had traded over the weekend, with silver being up to $78.11. So it did actually follow that, but then it got drove down. Chris Ryan says, do we have resistance at 76? I think, mate, off looking at, I thought, I did it on one of my videos the other week when I was shorting. I think I was in at 80 so many numbers and so many days. I can't remember now, but I was round 85, I think, shorting, and I was expecting it to come down to $78. So I kind of had $78, $72, $68, $64. Then, if we go past that, I think we could try and retest $50. You know, the old high. The market always tries it, doesn't it? You know, it's not something new. And the reason we could, you know, it's complete halving, isn't it? The other week before the slam down, where were we at? $120 per ounce. What did they drive it down to? 63, something like that. I can't remember because I was actually on an aeroplane coming back from Poland when that happened. So it was a case of get off the other end, turn your phone on, saw the drop, and I was trading going through customs. But it worked out really well, that. But I did miss that. Did miss that move, and when I looked at it and I saw the red candle, my initial thought was, "Holy shit! That's never seen a move like that." I don't think anybody has in the silver market. You know, it's a groundbreaking rule. It was a groundbreaking move, I should say, and not since the Hunt brothers have we seen anything like that. I'm sure everybody knows about Bunker Hunt and what went on when they tried to corner the silver market. And, you know, there's a myth about the Bunker Hunt and his brother. When they tried to corner the silver market, it wasn't a case of the Comex went to sell only. That's not strictly true. What they did was, they went to, if you wanted to purchase silver, with the margins went to 100% on purchases. On shorts, there was no increase in the margin, so it kind of became a no-brainer. It was obvious at that stage where the market was going. That's all they had to do. So when you hear people saying, "Oh, they went sell only," not strictly true. Not strictly true. They may as well have done, but they didn't actually come out and do that. And that's pretty much why they weren't able to sue the Comex. But not only, I mean, the government proper went after the Bunker Hunt and his brother, didn't they, after that? Not only did they make them lose on the trade, they also prosecuted them, didn't they, and took them to court, and they literally bankrupted them, you know, and that is, they were already, you know, they were billionaires. In hindsight, would they have done it? Of course they wouldn't. But they saw a gap, or what they thought was a gap in the market, and in theory, the trades were working really well. The problem they had was using leverage. Leverage is an absolute killer. This silver contract, the May futures, it's just starting to drift upwards slightly. That's nothing to do with silver at the moment. That's because gold's getting a little bit of a bid up to the 100-day moving average on the hourly chart. So they might try and bring it back down, but I want to see what these volumes are. So to answer your question, Chris, do we have resistance at 76? Possibly. Possibly, because over the last 2 weeks, 76 has been a little bit of a magnet for price, hasn't it? You know, when we had the overnight smash, when there was shenanigans going on in China, you know, with the Shanghai market, it dropped down coming into the close, and as soon as China, as soon as Asia, I should say, came online, straight away there was more. We could get a quick gap up here, possibly backed into towards that 79. If you're looking at this candle though, and the previous ones from the weekend, as soon as we get anywhere close to that $79, the sellers are coming in. So they kind of don't want it getting towards $80 again. But 76, that seemed to be a little bit of a magnet for whatever reason. Whether somebody's got it as a Fibonacci retracement level, who knows? You know, and when you look at Fibonacci's, you can do it on the daily. That seems to be the main one. But you can put a Fibonacci into an hourly chart, and it can differ quite a bit from a daily chart. So it's to answer your question, 76 could be a little bit of resistance, but if we are going to drive lower, 76 won't be resistance, 72 won't be resistance, 68 won't be. I said in one of my videos last week, what they could do is maybe stop around 74, 72. You'll get dip buyers coming in, which will increase liquidity, volumes will increase, which is what the short sellers want. They'll then go down to the next level, which could be around $68, and you'll get people buying the dip on the second time. They might try and move it into a moving average as well, and that's where more dip buyers will come in, thinking they're not going to do it twice. But ultimately, if we're going down to $44, which I hope, are they going to try it there? Why not? Before we went through $50, do you know $50 when we first went through it, there was no pause, was there? It was like an all-time high. Are we going to hover around it? And I did say weeks ago, when we go through $50, we're either going to butt up against it, have a bit of a retracement, and then move through it, or we're just going to ignore it altogether and we'll just shoot straight through it. And that's pretty much what we did. Never really retraced it. We went, into the 60s, $63, $68. Then we came back into the 50s and we had a pull down. And I can tell you, it was on a Wednesday morning and it was at 8:30 in the morning. And I got really, really, I won't swear in case there's children watching, but I was really fed up because I wasn't trading at my desk. I had to go out. And I missed the move. And it was a quick flash down to 44, which I had at a buy price. And I missed that move. And it cost me, that trip out, I worked it out, about 350,000 quid. So I was a little bit, it's a lot of money, you know. So I was a little bit fed up with that move. And I've always thought, at some point, we will try and get back to 50, retest that old high. If you're going to go to 50, the other support level is 44. And I think that's where they might try and get to this week. Whether they can achieve it or not, I don't know. That might be a bridge too far. Now, obviously, they can print as much paper as they want. Bix Weir will always say they can go to minus $40 like they did with oil. Not really, because do you know that minus $40 with oil? It kind of made sense. It really did. And as bizarre as that sounds, when COVID was hitting, everything was coming to a stop, and all of the traders who had longs on the oil and just wanted exposure to the price, no intention of taking delivery. You're not going to get a hedge fund that wants to go and get 1,000 barrels of oil delivered at the doorstep, are you? So what do? They sell out. And everybody who's then got oil, who's thinking, I can't get it, I've got to get out of this market, but the price is dropping. If you couldn't sell them contracts, where were you going to put the oil? None of the refineries had capacity to hold, so you then had the option. We're just climbing again, so I might take another couple of £100 profit on this one, which would be what we've been trading 20 minutes now, which would be £400, the £400 profit. I'm just going to wait and see if we can get up towards 78 again. But yeah, so you've got all these hedge funds, people who don't want the oil, they want price exposure to it. But what they were finding was they couldn't sell the oil, and if by the time the contracts were coming to expiry, if you were left with that contract, you have to take delivery. You then have to put it somewhere to store it. There's nowhere to store it. The refineries were jam-packed. Where do you put it? You put it on an oil tanker. And what do the oil tankers do? They were charging something like, I won't remember it, £750,000 a day to store your contract of oil. So it made sense to get rid of it at any price, take the hit, lose £500,000, lose £1 million on the trade. It doesn't matter, because if you don't get rid of that oil, you're going to be paying £750,000 a day in storage, which we can't do. So that is why it went negative. They were literally, the traders were literally ending up paying other traders who wanted the oil and had capacity to take it off the hands, and that's why it went to minus $40. So it made complete sense. it wasn't the futures market having an absolute meltdown and let's sell the oil because somebody's clicked a mouse and it's gone to. Not at all. That isn't the case. And I don't mind listening to Bix with you. You know, sometimes if I can't do the research myself, I'll put him on because he'll give you the what's in registered categories and all that, and it just saves me doing a bit of work. But when I hear him saying, "Oh, they'll just click a mouse and put it to minus $40," not the case, not that easy, and that's not what happened. So, yeah, I wish he'd stop saying that. Could they do it if they wanted? Yeah, they could, but they didn't do with oil. That's not what happened. It was just the traders needing to get rid of the oil, and the brokers made an absolute fortune. You can imagine the phone calls now. I've got 1,000 contracts. I need to sell it. Nobody's buying. We'll pay them to take it off our hands, and the brokers will just sit there like, I know someone who will take that off you. That's how you get the price being driven down. And it was in the UK. There was retail traders that made absolute millions out of that. There was a program done on them. They remained pretty much anonymous, but they were retail traders. So if you're sat at home in front of your computer thinking, it can't be done, it's never going to happen to me, hang on in there. You never know where it's going to take you. So I hope that answers your question, Chris. That's a long way of getting round it. Resistance at 76, possibly. But if they want to blow through it, they will. I don't think it's particularly going to go down to 76, hang around and maybe bounce back up because buyers are coming in. It could be an area where it kind of pauses, but not for any other reason than it's just an area that will pause at. I don't think it's a particular pinch point for buyers and sellers and see who comes out on top. It's just going to be one of them areas that see where we are, see if anyone will come in. No, right, next level. And I think that's how this week is going to go. Do you know, this week, I'm convinced that it always happens. It's going to be about timing. It's going to be about you, me, having eyes on this market. And you'll see once the volatility starts. I've often said this. You'll see the candles and they'll flick along nicely. And like I've always said, it's like the waves of the ocean. If you look at the sea, eventually you can see a wave coming just before it starts because you see that rhythm. And when the tide's changing, you'll see that rhythm, and then it'll just start, and you spot it. And with the markets, when it's like it's just ticking up and down, and occasionally you'll see a sell coming in, and it'll pause for a second and move down, then come back to where it was. That's often an indicator that there's a seller testing the market. The brokers are trying to fire that into the market and see what effect it has. And it's often a precursor to a move down. You also see it with a move up. You might see a bit of a, and then it'll tick along, and that's brokers. They'll be testing the water to see what size of trade is going to move is going to move that market. So it's a case of having eyes on, and I'm convinced it's going to be at a time. It could be, let's pick a time. Let's not bother with tomorrow. It could be anything tomorrow, but on Tuesday, I suppose we could pick tomorrow, because back 11 o'clock tomorrow night, Comex will be back online. So from 11 o'clock, we could get straight from the open, wham, straight down. It could be 8 o'clock in the morning when the UK comes online. It could be 7 o'clock in the morning, I'm talking UK times now, when in theory China should have closed out, although they're not trading. So it's going to be at a predetermined time. This will already have been arranged, in my view. At a predetermined time, traders will put the orders into the brokers. The brokers will wait and try and maybe scalp a little bit out of that market themselves. That's what they're there to do. And at, say, 8 o'clock in the morning, it'll start. And it'll start with a 50-cent move, a $1 move, a $2 move. You'll get people going long, trying to buy that dip. and it'll slowly edge down so that they're thinking, oh, it's going to come back up. Should I get out of the market? And before you know it, you're $3 or $4 down. You're $3 or $4 in. Then you're thinking, well, I'm in now. Am I gonna switch over? Am I gonna go short? But what if the market comes back up? Am I going to be chasing it? And it's that confusion that they want. You could see a quick move down. You could see a quick move up. They'll whipsaw this market all over the place. And like I've been saying in my videos, you'll hear loads of advice from so-called professionals. Keep your stops tight. Keep your stops tight. In a market like this, really, in a market like this that's whipsawing around, why on earth would you put a tight stop in? Personally, as I've shown you, I reduce my unit size and increase my liabilities by either not putting a stop in or putting it $10 away, $12 away. Because otherwise you're just going to get constantly stopped out. Constantly. So there's no point. And even with, I mean, one unit tonight, I've just put another unit in now, as you can see, and that trade is still going. Where are we up to? £151. So in half an hour, if we close that out now, we've made, can't remember what the other one was now, 100 and something quid. So we could have been making 350 quid in just over half an hour. A lot of traders, that'll be a good week's trade, and fair play to you. Personally, I couldn't care less about that. If it's there though, I'll take it. This week we want to be trying to make big money. If the move doesn't go the way I expect it, fair enough, I'll suck it up. But at least I don't want to be sat there thinking, I thought that was going to happen, and then you've missed the move. Well, if you think it's going to happen, why are you not sat, poised, waiting to pounce? Do you know what I mean? I'm not into hard luck stories or anything like that. Anybody can make them up. I thought it was going to happen, but I had to do this, or I was tired, I fell asleep. I've had a couple of messages from people saying I can't do it. Oh, I've got to go to work. I'll be tired. You know, obviously, be tired for a few days. It's not going to kill you. You know, if this is a job that you want to do and you want to make money at it, sometimes you've got to make that sacrifice. Yeah, it's tiring. Yeah, it's long hours. Yeah, it's boring. Yeah, it's lonely. But the rewards can be fantastic. Although someone's just closed the door now and it's getting really hot in here. Got middle son at the side of me. He's trading tonight.
Right.
He's trying. What's going on in live chat? Ollie Stone. He says it's climbing. It's struggling. Gold is going to possibly drag silver up at the moment. Frankie James says, remember that. That was in respect to the oil. Chris Ryan says, how close are you putting your stop losses? At the minute, mate, as you can see, well, I don't know if you can see behind me, actually. I've not got a stop loss in on this long that I've got. You pack it in?
Me.
Was it him? You got irritable bowels, you.
Got a strong mic as well, mate.
Yeah. So, yeah, Chris, on this long, I haven't got... Chris is laughing at you in live chat. Not surprised. In the words of Macaulay Culkin, you filthy animal. There's something else I want to tell you about at the moment as well. And this is slightly off topic, but it all comes in to distraction. So, yeah, it's only one unit anyway, though, Chris. So in theory, for every dollar we move, yeah, I won't be getting too upset about that if it goes against me. But I do think we could, as this hour comes to the close, I think at some point we'll go back up towards $78. Maybe we'll have another push at 70 towards 79. So from where we are now, it's another couple, 300 quid. Jess Tennant, looking very smart there, Jimmy. Thank you, Jess Tennant. Good to see you up at this time of night. I've got to confess, Jess is my daughter. So No, she'll be trading silver. Hopefully you're making a few shekels. $77.10. $77.7. There's a little bit of volatility coming into this now. You can tell because the spread on the, if you look where my mouse is, the spread is fluctuating between 10 and 20 cents. Now, normally that's about 2 or 3 cents. It's not been like that for a few weeks now. We've just gone through 23.32. Do you know, my memory's getting shocking as I'm getting older. I've got my head full of fixtures and football fixtures and rugby fixtures and numbers, and that initial trade, it took us 3 minutes and we made 173.50. And that was purely because if you missed it, there was the market was just whipsawing about. So when it's doing that, if you can get in there, it goes like that, and you just take a quick profit if you can. Talking to myself, obviously, can't give financial advice. But yeah, so 170 quid. We got down at the bottom again, 75 we got in at. It's currently £114 up. So it's nothing to get excited about, but if they're offering profit, we'll take it. Just one unit, no need to pile in at this time. I'm not bothered about the small trades at the minute. Like I said, I'll take them if they're there, but we want to be, by Wednesday, if it's going to go the way I think it is, we're going to be up around 650,000. If it goes back the other way, by the end of the week, we'd be at 1.3 million. Then we can sort of start the move up to $150 an ounce, which is, I know some people will say, you know, with if you compound the interest from 1980, $50, 2% a year, you're getting up towards that $200 per ounce mark. That's where you should be. I go slightly less than the $50 mark because we didn't really stay there. It was only there briefly. So if you take an average for the year, I think when I worked it out, compounding the interest 2%, I got it to about $150. So a little bit less than most market analysts, and maybe they're right. You know, I'm not saying I'm right, but that's just the numbers I got. So this big move up that silver's had, when I hear people saying, oh, I'm talking about professionals, you know, Jim Cramer. When you're watching the halftime show and they're saying, yeah, silver's a little bit overblown now, it's a bit frothy. It's a bit frothy, they like to say, don't they? Its move's not even started. It's got that 40 odd years of suppression to get rid of first. We get rid of 40 odd years of suppression and we move up to $150. Then you start your move. That's when you start the move that takes into account all the money printing that's occurred since 1980. And that's where you can get the move into $300, $400, $500, you know, and beyond. And beyond. It's an inelastic price, isn't it? People who need it will pay that. They have no choice. They just don't. The only people who don't want it going that high are the shorts, the naked shorts. The miners, they've not been, they've not even started the move yet. And when the miners do start the move, where are the miners going to go when silver's at, well, when silver's at $150? Where are the miners going to be then? You know, silver will overshoot gold, but the miners will overshoot silver. So if you can find a half decent miner, who am I thinking of? Who do I always keep my eye on? First Majestic Silver. What are they trading at the moment? Closed market. Latest price is $22.92. Where's that price going to be? Keith Newmeyer always predicted triple-digit silver, didn't he? I don't know if they've got Jared Canyon back online now. I know it was on care and maintenance, but with the silver price being where it is, are they going to? Is it up and running again? Possibly. And the profits. When are the profits coming out? We're coming up to the. It's funny because in the USA, the tax year works from, I think I'm right in saying, from January to December. The UK, we work from April to the end of March, pretty much. There's a few days in April, but that's our tax year. So when these miners are putting their profits out, if they're selling into the markets, and that's genuine selling, then they could be moving up. The issue they've got is, and a lot of people don't take this into account. If you're a miner and you've got, I'm no expert on picking miners out, by the way, but common sense says, if you're a miner and you come across a deposit of silver, very often the price shoots up, and that's the move done. And then they start producing from that deposit. So you're getting it out of the ground, you're getting it to the refinery in Doré Bar, you're getting your payment, and profits start going up. But you'll see the share price start coming down. And the reason behind that is you're taking away from the lifetime of the mine. You're now depleting that reserve every time you're sending every time you're sending your concentrate to be refined, you're depleting the asset, and that's often why the price goes down. So that's why it's important that the miners that they keep going on with exploration and finding new veins, finding new sources of metal, basically, because otherwise the share price will start coming down. The main move from miner is often when they put the news out that we have found an asset, a vein, we can extend it another kilometre or whatever they're going to do. And when you start producing, the profits come down, and it sounds counterintuitive, but it's not when you think about it. I've got two Hail Mary miners that I use, Vast Resources, absolute garbage, and Phoenix Copper. Last week they didn't get arrested, but they suspended the CFO and the top brass for something's been going on. So yeah, we'll find out more about that. But I always say, if you're going to go with these Hail Mary miners, expect to lose your money. Anything that comes off is a bonus, and they can come off in a big way. But don't expect it. But they are good fun. Sometimes it's just something else to look at instead of looking at commodities. Do you know the other thing? The channel's called Commodity Confidential because that's what we trade mostly. Mainly because of the volatility. We know that there's suppression there, so take advantage of it. But I also trade the Forex markets as well, and you're not a big enough glutton for punishment. But yeah, with the Forex markets, you get that movement, you get that liquidity, you get that volume, you get that price movement, and price movement is what retail traders need. Unless you're investing large amounts of money, then I don't see the point in investing in somebody like, you can't use Nvidia because that was an anomaly. If you got in at the start with Nvidia, it was a really good move and you could have made some decent money. But if you're a retail trader and you've got what, I don't know, 10,000, 20,000 to spend or something like that, if you put it into something like, who am I going to say? Let's say Intel. They've had a bit of a shocker lately, haven't they? The price has come down, and for various reasons. But you've got to remember as well with Intel, one of the major backers and shareholders now is the US government. So it might not be a bad trade, that. But unless it's going to move in a big way, if you invested, let's say you invest £10,000 as a retail trader in a stock, and that stock moves over the year, let's say it moves, 7%? Fantastic. But you've made 700 quid over the year. Now, if you're doing it passively, then fair enough, 700 quid profit, that's all right. But what a waste of your £10,000. You could have been doing so much more with your money. Just getting a little bit more. Volatility is coming in. Volatility and volume is coming in spits and starts. I think by the end of the hour, we could end up back to where we were at the open. We've got that move down on VWAP. It's holding VWAP. So it's going to be interesting. This. We're going to get fireworks this week at some point. It's just when the fuse is going to be lit. I'm still going to leave that one in, this trade here, just to see if we get down here, if we can get a sudden spike up, and we'll make another couple of hundred quid on that. In live chat, let's have a look what's been going on. I answered Chris, didn't I? How close am I putting your stop losses? Not close at all, Chris. And Jess Tennant looking very smart there, Jimmy. Thank you, Jess. Chris Ryan says it is dropping. Chris says, do you trade crypto? I don't, mate. I don't trade crypto, mainly because I just don't get it. Don't get it. I'll tell you well, it's not a funny story, but it's a story. So years ago, excuse me, when crypto first came out, eldest son came into me. I'm going back donkey's years now. And he said, have you ever heard of Bitcoin? So I said, never heard of it. So he said, oh, it's this digital thing where you can pay for games or something on the Xbox or whatever. And he said, how much? I said, oh, how much is it? And he said, oh, it's like 10 pence or something like that. And I just said, oh, you know. So he said, oh, you can buy pizzas with it as well. And that was it. And I never took any more notice of it. And then look where it is now. So when we were looking at it, I think, I'm not joking, we could have been in. We could have been in on Bitcoin at, I think it was 10 pence. So I learned a lesson that day. Don't poo-poo or dismiss when somebody tells you something you don't know about. I should have took more notice, but that's an interesting little move. If you look at spot silver there, VWAP is just starting to go below the bottom of the Bollinger Band. You don't often see that. You don't often see that. So I think we might get a little bit of a move up, because that downward move at the minute is, looking at the volume, where are we at? I think I said earlier, if we can get towards sort of 6,000. What have we got? 15 minutes to go. We're at 3,000. So it's not quite as high as I thought it might go. But on a Sunday evening, when Shanghai futures are closed and Comex is closed, in theory, it's the grey markets that are trading. That's not grey market volume. So there's more bums on seats and more computers turned on than normally you would expect for a quiet day. Why the US of A is on holiday. Jess Tennant says, what about Revolut? I randomly bought a couple in May and I'm up £10. No idea what to do with them though. I don't do numbers. Revolut, that's the money transfer people, isn't it? Don't know much about money. I mean, I know of Revolut, but I wouldn't know where to start trading them. It's not something I'm looking at the moment, because pretty much the commodities are taking all my time. I had some decent enough trades on the dollar yen. Still waiting for the Bank of Japan to intervene. The Bank of Japan wants that dollar yen down to 126. That was stated last year in 2025. Nothing's changed on that. The only thing that has changed is they've got a new prime minister. That dollar yen trade has still to unwind. No way has that been done. If you don't know about the dollar yen trade, it's been going on for the past 40 years, something like that. I know I was a teenager when that was happening. And all it was the best profit making scheme ever. You buy yen where the interest rate was virtually nil, so you've no interest rate to pay on it. Then you go and buy American treasuries, you could buy gilts, you could buy bonds, and you would literally be making, I mean, what were interest rates back then? They were at 7%, something like that, 7-8%. It was a fantastic deal. You just could not buy enough. You could not buy enough Japanese yen, or as much as you could. No interest to pay on it, hardly. And then you go and buy a treasury or a bond or a gilt for 7%. You're making 7% risk-free, and it pretty much is risk-free. So that is, now that the interest rate started to rise in Japan a little bit, because they could not get inflation for decades. It just wasn't a thing in Japan. They could try, they could not get inflation. Everybody was trying to keep 2%. Japan was trying to get to 1%. It was hideous. But now that the yen started dropping, they've had to raise interest rates, which then means the dollar yen trade, that's got to unwind, which just causes chaos, in the financial markets. The unwind of that dollar yen trade it's in the trillions. And you've got to remember, Japan is one of America's biggest holders of debt. Japan holds so many US bonds and treasuries. That's why they can't afford Japan to go to the wall. But they have been offloading some of the US debt. And you can see it with the markets as well. They've been offloading US debt and they've been going into the commodity markets. Pretty shrewd cookies, the Japanese, believe it or not. And this weaker yen, they claim, oh, we need to strengthen it and that, but ultimately on the quiet, they kind of like it a little bit because it allows their exports to grow. It puts people in jobs. And when you're coming up to an election cycle, you want people in work. The downside of that is when you're importing goods, and Japan has to import a lot of goods, mainly around fuel and what have you, it makes it more expensive to buy. So that's where you get that inflation. Jess Tennant says, I invested in some silver on there. I'm up £3.94, bought £5 worth. Profit is a profit. A profit is a profit. There's days when I've done my brains. Have they given anything to have made a £5, a £3.94 profit? So I've told the story loads of times, and I don't mind telling it. I once worked back in 2020, 3 weeks solid with virtually no sleep. I was literally hallucinating by the end of it. And I looked at the settee and I could see the cushions dancing around, and it's like, you need to call it, Jimmy. You need to call it now, son. And I should have done. And in 3 weeks, I made 135,000, a lot of money. And making bad choices through fatigue and tiredness, in 7 hours, I lost 92,000 of it. So still a good profit over 3 weeks, but that 92,000 going down when your eyes are droopy. And I had to go in hospital for an operation. I had my gallbladder taken out and a bit of my liver with it. And I was still trading while I was in there, doped up on all the painkillers and what have you. And in Rick Rule's words, when it's coming down like that, it's a spiritual experience. It's not pleasant, I can tell you. But like I said, still a good profit. But 92,000 in 7 hours, that's it's an experience. One that I hope you never go through yourselves. But these things happen, and as they say, play silly games, you win silly prizes. Right, the other thing that I wanted to tell you. So, we know what's coming this week. We're going to have volatility in the markets, in the commodity markets. Maybe a little bit of follow through into the FX markets as well. There's a trade, Frankie James says, we survived. We certainly did. We thrived. But we could have been £92,000 richer. Give your head a wobble, Jimmy. Sort it out, son. Jess Tennant says, doesn't sound pleasant. that could have been a few bikes. It certainly could. It certainly could. That's probably why it did me a favour. So, as you can see, we're coming up to 8 minutes, 7.5 minutes to the turn of the hour. This candle is pushing beyond VWAP. It's pushing on to bottom of the Bollinger Band. Chris Ryan says, you a biker, Jimmy? Certainly am, mate. Although my race bike, I've not been on that for... Last time I took it out, I took it out for a test, and that was in Wales, and that was in 2020. I've got some videos, I'll put them up. There was one on YouTube at Portimao, you know, on the Algarve in Portugal, in the wet. Got filmed with an 185 mile an hour overtake in the wet coming into turn 1. That's my claim to fame, and I made the corner as well. I've got to be honest though, I just tipped it in, and I thought it either sticks or it doesn't. And luckily it did. We're just going to come down to the bottom of that candle. Where did that candle come down to? 75.09. I don't think so, because gold's holding steady at VWAP, which is in an uptrend. Spot silver, that's below the Bollinger as well now, and VWAP. So it is moving down. And where's the volume? Volumes are not rising particularly high. So maybe we'll see how low we can go before midnight. Because the other thing is as well, you've got to remember this hour now in the UK, it closes out the week. So on the weekly chart, let's have a look at that just so I can show you instead of waffling about it. If we look at commodities, go over to silver. That's the hourly chart, as you can see. But we can go over to the weekly, and this final hour is still part of that week. So, you know, when we had the move down last week and it stopped at $64, that was the low when all that selling pressure came in. Spreads going nuts, says Harv. Yeah, it is, mate. Don't worry about it. That was a measured move down. So we stopped on the 20-day moving average on the weekly chart. So when you see, depending what chart you're looking at, you could think that's a bit of a random place to stop. But when you look at that, we close the week out smack bang on the 20-day moving average. So I've got some old trend lines in here as well, and these, believe it or not, go back donkey's years. So Chris Ryan says Tokyo's coming online. Yeah, we'll see what happens with Tokyo, mate. There's but they're going to be trading in the grey market, and it is slightly different. So we'll see what the volumes are. But you can see there, that was at the end of this long candle here. That is at the end of January when we had that humongous move down. We came to, it didn't just stop at 73.29 for no reason. If you move across, you can see there was a bit of a base there. So we've got 73.29 as a bit of a base. That's where we've hit it now. If you look across there, at the last 3 weeks, including this one, that's where we've stopped. And when we did push through it a week before last, it was a measured move down to the 20-day moving average. That's the other thing as well, why we've got this chart up. If you look down to the 50-day moving average on the weekly chart, we're in at $47.71. Now, that's why I'm thinking, if we can, could we go all the way down, by the way, to the 100-day moving average, which is 38.88? That was a bit of a pinch point, 38.88. We're not going to go that low, are we? If you're going to take it to 44, if you're going to take it to that 50-day moving average, if I'm looking at it, how many other people are going to be looking at that and getting ready to pile in? And if you want to drive it lower on volume, next stop is $38. I've got nothing. I've got nothing that stops us in the 50s. I just don't, which makes me think if we do punch through this 20-day moving average on the weekly, there's nothing stopping us going to $47. And I think if we go to $47, that's where a lot of people's stops will be. That's where a lot of buys will be. And I think we'll carry on to $44. You look at $44, there was a bit of chop around it. That was the law that I missed out on there. That law there was on a Wednesday morning. I've told you that story. Missing that because I had to go out cost me about 350 grand. So it was a bit of a sick knot, that, because I was waiting for the move as well. I thought I'll chance it. Expensive lesson, Jimmy. Don't take chances, you clown. And like I always say in my videos, if there's a mistake to make, I've made it. So hopefully I can stop you guys from doing it. One of the mistakes I always used to do was, in my stops too close when there was volatility in the market. There's another thing. I just want to wait for the turn of the hour now. Tokyo coming online. Asia will be coming online. We'll get Indonesia and see what's going to happen. We've just got 55 seconds. So hopefully this stream is not too far behind as well. Because it's the first live stream that I've done with Commodity Confidential, they're a little bit funny, YouTube. So I had to be a little bit cautious with the latency. But hopefully it's not too delayed. Chris Ryan says, that's what I do. Stops too close. Yeah, try not to do it, mate. Reduce your exposure. Well, you can keep your exposure the same, but just reduce the unit size and build into the position. I can't tell you what to do. So when I say you, I'm talking to myself. That's what I do. I often have to talk to myself and, you know, reinforce, like, don't get too giddy. Don't chase the move when it's going your way, because at the minute, it can come back against you. So keep it measured. You know, if you were to put, this is a perfect example now. Which way shall we go? What shall we do with silver? Right, we've just changed on the hour now. We're just below VWAP. The futures contract. Bottom of the Bollinger is at 70, roughly 76. Call it 76.50 for ease of remembering. Top of Bollinger is at 79.30. We've also got the 50-day moving average moving down. We've got the 100-day average moving down. This one here, this blue line, is my seven-year trend line, which makes me could we start moving back up? Possibly. Are we going to have the market look like it's going to behave itself, and then we get all of this? It's going to crash because Shanghai is not online and all of that. Oh yeah, no, that's not going to happen. It's going to be back to normal. Suck everybody in. Then at that given time, 4 o'clock on, I don't know, Tuesday afternoon, sell. There'll be something comes out in the news. We'll talk about that as well with Bloomberg and Reuters. I made some notes on it, so I'll stick to what I want to say without getting distracted. I know that's one of my faults, so I do try and make notes, so I'll stay on topic because I get sidetracked with things happening. Didn't quite get the follow through in volume on silver. It kind of petered out as we went through the half hour. And what were we on the early 3,814 contracts? Not to be sniffed at. Saying in theory it should be a quiet night. But we'll see what happens with Tokyo. We'll get Hong Kong and just trying to watch the price movement now on the futures. There's a little bit of trading back and forth. That's just bots trading. That's nothing more than bots trading. It's interesting though that we're getting that spread. It's fluctuating between 10 and 20 cents, which means the IG bot is expecting a little bit of volatility. Like I said, that's normally at 2 cents or 3 cents. So the fact that it's steady at 10 doesn't matter. If it's steady at 10, if it's steady at 20 cents, it doesn't matter. You can kind of build that into your trade. The problem is when you put your trade on at say now 10 cents, where it's been pretty stable there, but then they start whipping it round to sort of 50 cents, and that's when it becomes a little bit of a pain if you're trading. You can see that as soon as we go green, we start going green with a little move up, and it'll start jumping to 20 cents. As soon as it goes into the red and starts looking like it might move down, we go back to 10 cents, go into the green, and we have getting a little bit of a move down there now. Do you know that? I'm going to close that out any second now, because if we get a whip down, I want to get in around that 74 mark as a little bit of a trade, but it's at the bottom of the Bollinger, and I think we could go higher. Yeah, Chris saying about putting his stops too close. It's just a recipe for getting whipped out of the market. The only time it would be worth putting your stops close, I suppose, is if you're in the money and you're following the market up, and maybe you're reducing your size and taking some profit, and you want to follow it up that way. I suppose you can reduce your stop size as you start moving up and into profits, but if you're just putting a trade on and starting out trying to build it, stops that are too close just absolutely kill your trades. Chris Ryan saying, gotcha. A little bit of weakness coming in gold now. Just show you this as well. We'll have started a new candle on the weekly chart. This is on spot silver, by the way. Yeah, so there's our weekly, Monday the 16th of Feb. Could we be moving down to $66.64? I'm pretty certain we will do this week. I just can't see a reason why you wouldn't do it when you're underwater. Is it one of them? Is it a double bluff? Everybody's expecting it, so they won't do it, and they'll drive the price higher. Quite possibly. Quite possibly. There'll be loads of selling into this market if it looks like it's coming down. But then even when Shanghai comes back online, they'll still try and drive it down. Then, they can try and drive it down while Shanghai, in theory, is closed. They can do it within a few hours. We've seen it. But I'm pretty sure that there's no way they're going to leave anything on the table for Shanghai when they come back from the holidays. Which makes me think by this time next week, we'll be back to where we started. Which is, what did Shanghai close out at last week? I think it was $81, something like that. So the premium was quite low, really, compared to what it has been anyway. But I don't see us coming back online next Sunday night and having silver down at $50. I mean, that's just going to get absolutely gobbled up. The other thing with China, in Shanghai, the paper manipulators over there, I can't say the bloke's name, but he's been collared for it, hasn't he? Did he put a 350 million short on the silver? And he also leaked it out that was the trade that he had out there, and it kind of put a ceiling on silver. Everybody was then piling into short silver, but the Chinese authorities, the regulator, said, we're not having any of that on the Shanghai market. We don't want it to become basically like the Comex. So they've stopped that. There was also 6 other accounts that I don't say were his, but maybe they were in another name, and yeah, they've stopped those accounts as well. So Shanghai is trying to root out the manipulators and the naked shorters. Chris is saying, sorry, Harvey's saying, what about short players? Opinion on their next moves? The thing is, this market, a bull market is called a bull market because it will try and shake you off at every opportunity. Rule 101 at financial school. Do you know, day one, they may as well have it at the very front of the manual. And rule 101 is, the little man shall not win. They do not like us trading retail. They do not like retail traders making money. Why do they not like retail traders making money? The reason being, you've got financial advisors who go to college, university and what have you. They want to be making your investments for you. They want to make your investments for you because they're easier to manipulate as well, financial advisors, in my view. You'll never hear a financial advisor say, invest in gold, invest in silver. They want you investing in Nvidia, Intel, IBM. So that is why they don't want us making money, and at every opportunity they will shake you out. And the way that retail gets shaken out, because they over leverage. Almost every occasion it's over leverage, or they'll stay on a trade when it's obviously going against them, instead of realizing made a mistake for whatever reason, the market's going to go against me and keep going, and just swap sides. Sometimes you have to admit you were wrong. You made the wrong move. You know, it's not personal. We don't always make the right move. I mean, why am I in this trade now? 1 unit and it's long. Not because I think silver's going higher on any technical, for any technical reasons. There's no micro or macro that's making me think silver's going higher. It's just seeing that move down in the market when it's whipsawing around like it is. Take advantage of it if you can. And that's why when you can look at the market and you see that move, it's an opportunity. You know, if you do that, the other week I did it, it kept doing it. And got into the market, and in the space of 15 minutes, we made something like £5,000 in it, and it was just like, really? Are they really going to keep doing this? It was almost like someone was just giving you cash. But unless you're actually there looking at the market and waiting for moves, then you're kind of missing out on it. And you don't have to be trading big numbers either. I mean, I put 1 unit in, and what's that cost on IG? A unit to buy is 768 quid. So in theory, if you had £1,000 in your account, you can open the position up, wait for the right time, and if we make £300 now, if we had £1,000 in, you've almost made 50% on your account position. And if you can do it a few times over a month, you know, it starts building up. So you don't have to begin with vast sums of money. But it is time consuming, and it can be boring. It just can. And eventually, and it sounds awful, but you know, when you first start making money on the markets and you find your niche and you find out what you're looking for, it's like, this is fantastic, it's absolutely brilliant. But eventually it just becomes like, they're just numbers on the screen. And unless you're doing something big, which I'm waiting for this week, when it is exciting and it gets your old juices flowing, and you know, you can't wait, and there's that little bit of intrepidation, there's that little bit of excitement. That isn't the norm trading the markets. It's often boring. It can be quite, as I've said, it can be quite lonely. It can be lonely when things are going against you as well, because you've only got yourself to look at. And I've done it myself. I told you when I lost the 92 grand in 7 hours. You look in the mirror having a shave, and you've got to look at yourself and think, well, I won't swear, but like, what on earth? What were you doing? Why did you? And you can absolutely torture yourself. And to be honest, you kind of deserve it. But it's no good lying to yourself, and you can't lie to yourself. There's one person you can lie to the world. The one person you cannot lie to is yourself. So you've just got to suck it up, learn from it, dust yourself off, and you go again. Because there will be, I mean, I've had a decent month so far, but there'll be months where, you know, a few days where you're a few £1,000 down or a few £100 down, and it's not, the trades aren't going your way. There's not the movement, and it's like wading through treacle. And them spells, they do come. You've just got to stick in there. It's your job. If you are trading, it's not a hobby. You know, it is your job. And if you have another job alongside it, then you have two jobs. If you want to treat trading as a hobby, you may as well get an account with a bookmaker and put £5 on a football result. If you want to trade, you are working too. You're listening to news, you're looking at movements, you're looking, you know, how can I get a little bit of an edge? Getting an edge in these markets is not easy. The reason being, there's bots that are trawling the internet. Absolutely everything that comes out on Twitter, Facebook, Instagram, they troll, and constantly gathering information. And I'll tell you something in a minute about what happened last week and why it's wrong in a way. And I've still got to tell you the story that's coming out that's a distraction, which I'll do in a second. Chris Ryan says, do you have any lessons on your trading? All my trading is, mate, when I do my videos of an evening, sometimes, I think one day I didn't make anything last week, or I was setting up a trade, or I just can't remember. But I put all my trades out of times when I got in, times when I got out, whether I closed partially or fully. So I put it all out there, mate. They're all on videos. As for strategy, definitely I have a strategy, and it's not one of them strategies where it works every time and you make a little bit. It just doesn't. What I try and do is, and especially with the markets being like they are at the minute, with that volatility, you know, the price movement where suddenly you'll get a jump of $2 or $3 either long or short. What I'm trying to do is, well, I'm not trying to do, I am doing it. If I'm putting a trade on, if I think the market's going up, I will put a small unit on. Might even be one, might be two, might be two units. Hopefully that trade will lose money. And I keep saying this, you put a trade on and you want to lose money, and it's like, what? If you say to people, it's like, you put a trade on and you want to lose money, but it's like, yeah, because if I put a trade on now, where are we at? 76. Say it's at $77. So if I put, let's keep it simple. So if I put one unit on at $77, if the market comes down to $76, then you've lost what? £100. So I'll put another dollar on. But that, buy another unit, sorry. But that means my dollar cost average price now is $76.50. And so that's where I'm in the market at. If it goes down another dollar, bear in mind you're losing money. So then you'll go down to $75. So if you put a couple of units on there, you're back in your dollar cost averaging prices, $76. So you're automatically now bringing your dollar cost average entry price in then the market moves up. You're back to $76 and you're level. By the time you get back to where you were at $77, you're £200 in the money just by getting back to where you were. And then as it goes to $78, you've got 4 units instead of just the 1 unit that you started off with. So that opening trade, if you think ultimately the market's going higher, just start small with it and hope that it goes against you and you can lose some money, because overall you will make more money. Now if the market starts moving up and you're in the money, you can start building slowly as you move up. But I always find that when I lose money initially on the trade, overall I make more profit when it comes back up to where you thought you were going to initially get in, because you've suddenly got, instead of having 1 unit that's rising, you've dollar cost averaged in and you're suddenly starting again from there, but you've suddenly got 4 units. So it's just you've got to be careful, because if the market is coming down, you're kind of what they call catching a falling knife. So you've got to be careful. You don't want to have a price, or I don't want to have a price and then think, right, it's hit my price, wallop. There's 40 units, let's start building on that. Because if it keeps going, you're under pressure and you're thinking, oh, I don't want to be losing more money. I don't want to be losing more money. I mean, the biggest units that I've had on silver was back in COVID, and I had 200 units because I was getting messages from IG saying there was they were happy for the unit, the number of units I had, but there was going to be a little bit of a margin increase on 25% of them. But that was if I wanted to increase it. But I was quite happy with, the 200 units, because that's sort of every dollar you're at $2,000, and it's moving sort of 10. When it's moving $10, you're at 20 grand, and crazy numbers. Sorry, 20,000. So it's for every dollar. So it's crazy. It's crazy numbers. Just looking at this green candle here, it's holding VWAP. And it's not, is it? It's just pushed through there now. What we on? 20 past midnight. We could start a little move up towards that 20-day moving average, possibly head towards the top of VWAP. I think the highest we go before we get a drop this week is around 80. This is on the futures market, 81.46. Just looking at the spread, that spread between May futures contract and spot, it's normally around 70 cents. That's in contango. So in other words, the futures market is higher than the spot price, which is as it should be. Briefly last week, we went into backwardation. It was hopping in and out of backwardation, and then it finally came out of it, which means that initial stress of people wanting silver now, it was there briefly, but within a day, we went back into contango. Chris is saying he's new to trading. Also, what indicators do you use? The main ones that I like to use, Chris, I keep it. I have another screen, which is a pro trading screen, but it doesn't work on YouTube that well. This is much clearer. But I have my own trend lines that go back. Some of them go back to 1920, just after World War One. They follow through, but I've got more recent ones as well, so I'll put my own trend lines in. But the main ones, if I'm trading, I like to use VWAP, which is a volume weighted adjusted price. I like to use the Bollinger Band mainly because moves up and moves down will go from top to bottom of the Bollinger. Sometimes, as we saw earlier there, if you look at my mouse, we punched through it, but we came back inside the Bollinger for the close of the hour. And that the Bollinger is just an indicator of how much volatility there is there. So if you look over here, you can see we had a lot of volatility where there was a real, I mean, look at the bottom of the Bollinger. Bottom of the Bollinger was at $71.93. Top of the Bollinger, we were at $88, and this is on the hourly chart. That was, but that incorporated 4 p.m. Thursday. That's that big move down. I'm going to talk about that now. Why that move happened. So the official narrative that came out was all the markets could dump. The official narrative was it was because of AI and the funding of it, and tech came under pressure. Yes, sorry mate, it is the 1 hour chart. Yeah, tech came under pressure, and that's where everything started selling off. Apart from, and I did it in the video and I showed you the candles, everything started selling off apart from bonds, 10-year bonds. Normally, in a normal market, if you trade, I don't want to teach people to suck eggs, but I'll assume that nobody knows anything. So, in a 10-year market, the 10-year bonds, if the bond moves up, you've got to think the bond moves up, which means interest rates are coming down, and people often can't get their head around that. So if you think of a pencil, that's a pencil. If the bond or the treasury, if it moves up in price, it's going up, up, up. What's happening to the interest rate? The interest rate, it comes down. There's a coupon attached to the bond. There's a caveat where you can go into the secondary market, and there's expiry dates on the bond, and there's the time decay of money, and that all gets too complicated. Ultimately, you can factor that in, but for the majority of moves in the bond market, if the bonds start moving up, that means interest rates are coming down. If the interest rate's coming down, that means the dollar should come down, because people don't want as many dollars because the bond isn't as appealing. So you wouldn't buy a dollar to buy the bond. Go back to the Japanese yen, the carry trade, that kind of thing. Last week, when bonds got a bid and they started moving up, the dollar also rose when it should have, in theory, been going the other way. Now, the reason it didn't happen, I've made notes, so I'll read them out now. Chris says, what's your setting on the Bollinger Bands? I'm not sure what you mean by that one, mate. Are you trading... What platform are you trading on? I'll just give you a second to answer, because obviously there'll be a little bit of a delay. You're on TradingView. If you go to, I've not used TradingView, so I don't know. But if you go to Trade Nation, if you go to indicators and click on there should be Bollinger Bands, and it'll just give you. You've got it yet? That can be a really good. It's not something to pin your hat on. Definitely not. But it often gives you, as the Bollinger Band narrows, it gives you an indication that volatility has just waned a little bit. So price is stabilizing. Because as you get a big move, if you were to get a big move down, initially, the top of the Bollinger Band won't come down with it. The Bollinger Band at the top will go up. And then if that downward move continues, it'll turn over and it'll start following the market down. But initially, it's like where we're looking at, there's the top of the Bollinger Band, there's the bottom. If there was a sudden drop down now, that Bollinger Band there won't follow down automatically. It'll start pushing up. And that's because the implied volatility means that the market could be coming up as well. If that downward move continues, eventually this Bollinger Band it'll probably go up here, and then it'll start moving over, and coming down. So as it widens, that implies more volatility. As it narrows, as you can see, we had a big move over here where it was really wide. Then prices kind of stabilized a little bit with chop sideways. I'm saying chop sideways, they're quite big moves, but in the grand scheme of things, the Bollinger Band is saying from here, it's kind of steadying a little bit. So you often trade top of the Bollinger Band there to the bottom. So going back to this move that happened on the Thursday, Chris says, I've got them, but can you adjust the settings? I take it yours are on the default then. Yeah. If you use the Pro charts, you can adjust them, but there's no reason to adjust them because they'll move automatically, and the calculation is done for you. It's like when you're looking at the 20-day, the 50-day, the 100-day, the 200-day, the moving averages, they're automatically calculated for you as well. Obviously, you can put your own trend lines in wherever you want to, but and the other thing is, you can have a look at this here. There's definitely selling at 78.83. It's tried on what, 1, 2. We punched through it once, and that was on the initial move. But after that, we've tried 1, 2, 3, 4. We've tried 5 times, and we cannot push through that 78. Towards that $79 mark. Normally, if you try the first time at a figure, whether it's going up, going down, and it gets rejected, you try a second time and it gets rejected. Third time, it'll punch through and continue its move. If it kind of gets rejected a third time, you can see price can start breaking down, or if you're shorting, breaking to the upside depending on, the figure that you're trying to break through. So it's normally that third attempt where you either continue a move or it gets rejected. And it looks like 78.83. It's been rejected 5, 6 times now, pretty much. So it looks like that's where we could be topping out. So going back to that story of what happened last Thursday. So we got the waffle that the markets were selling off because there was weakness due to the cost of AI. Tech was taking a bit of a nosedive, and that was the issue. However, there was a little bit of shenanigans going on, and I made notes, right? I wrote this out because I want to read it properly and I want to get it right. Thursday last week, major financial news wires like Bloomberg and Reuters. That's the other thing. I have Reuters. It comes straight through to my phone. As soon as there's a headline, it comes through to my phone and I get the alert. And I got it on... I mean, I made decent money on it, but I was actually driving when the alert came through to my phone. And as soon as I saw the candle on the markets, it was like, oh, I need to get back quick. I need to get back quickly. So Bloomberg and Reuters carried the headline suggesting that Russia was buying US dollars again. That grabbed the traders' attention because it had been a big signal, given Russia's multi-year effort to de-dollarize, and they've been kicked out of the SWIFT system, haven't they? So there's no point in them kind of holding dollars. This is a key point, right, that you need to know, and I hear it all the time. When the CPI numbers come out and the PPI numbers come out and the job numbers, when they come out, and you hear people saying absolute nonsense. Who thinks that CPI, or is it 2.4% now? You go and do your grocery shopping, and it's like everything's astronomical. 2.4%. It's an absolute joke. We know it's around 20%, something like that. But they can fudge the way that they do the numbers, can't they? So if they want to bring CPI down, instead of getting the price of steak, they can use the price of minced beef or something like that. This is how they get away with manipulating the prices. But it doesn't matter. It doesn't matter. And I'll tell you why it doesn't matter. Because they can put a fake number out all they want. But all the algorithms do, they look at the number, and that's what the market trades on. So yeah, the number could be absolute rubbish. You know it's absolute rubbish. But it doesn't matter. You have to take them numbers at face value, because that's what moves the markets, and that's what the market trades on. You know, when we trade in these markets, we're not trading in reality. We know that there's a massive deficit between physical silver, what's actually mined over a year, what's mining capacity. We're at peak silver, aren't we, at the minute? And what's that, 850 million ounces per year? What's used over 1 billion ounces? And this has been going on for years. So we've been at a deficit for 5, 6, 7 years. But these are the numbers that they put out. So when you're looking at the markets, if you think you're trading on reality, give your head a wobble. You are not. You are not. Do you know, when you think this time last year and silver was at $20 odd an ounce, if you'd have known, if you'd have just had that crystal ball and thought silver at $120, you're having an absolute giggle. One thing you'd have done, you'd have gone straight to your bullion dealer, you'd have took out a loan, you'd have done whatever you needed to do, remortgage your house. I'm not saying do this, by the way, but you just go and raid your local bullion dealer, your coin dealer. You get into the markets and you just go along and ride it all the way up. Any pullbacks that come, fantastic. You know it's going to $120 an ounce. You wouldn't have thought that when it was trading in the 20s. And it used to be, can we break $30? Can we break $30? We tried in 2020, rejected it twice, and we came back down into the teens, was it, or low 20s. No. Silver, it's over with. Silver, it's a dog. We're at $76 now. So the move is still a fantastic move, but we know it's going much higher. And when people say, "No, surely not, it's not going to do," they would have been the same people who, when we were at $20, say, "You'll not break 50." You can understand why they would think that, because the price has been really suppressed for 45 years. Hopefully they won't suppress it for another 45 years, because it won't benefit me. I'll be long gone. You know, it's... and the thing is, once you get to a certain age, years ago I used to look at 30-year bonds and think, are they an investment? Yeah, not bad. Now I look at a 30-year bond. 30 years, I'm going to be pushing 90. It's not going to be any good for me. So depending where you are at your your stage of life, for some people, a 30-year bond now might make sense. For me, it makes no sense whatsoever. So it's when you hear people giving out financial advice, it's like, how can you do that as a carte blanche statement? Somebody who's in their early 20s, a 30-year bond, if you can get a bond yielding 7%, that's not bad. You can always sell it in the secondary market as well if you want to. So it's you just can't give advice like that, and people shouldn't do it. They obviously give it from their own perspective, and that's fine, but make that caveat that me, it makes sense. For others, maybe it doesn't. And they don't tend to do it. But anyway, I'm getting sidetracked again. I need to go back to my notes, or else I'll never get to the end of this story. So what the reports were actually about, this is going back to Russia buying dollars. What the reports were actually about, in the most accurate reporting available, was discussion or speculation that Russia might be considering re-engaging with the US dollar system in the context of a potential economic package with the United States. This is what the reports were about. we're talking about Russia. They made it out as though it was a memo that was leaked. You do not get things leaked out from Russia like this. It doesn't happen, does it? I mean, what do they always say about a Russian doesn't take a dump without getting it in writing first? It just doesn't happen. It's just, my view, it's market manipulation through media, a combined effort to drive down commodity prices and the markets. And at the weakest time when Bitcoin was also taking a bit of a nosedive as well. That's what drove these markets down, not the news that was breaking, that, funding tech's a little bit of a problem, so the tech sector's weighing heavily on the markets and everything's going down, and there was a rise in the dollar. There wasn't that big a rise in the dollar, even though you look at the bond market was rising. That's what the issue was. So Russia might be considering re-engaging with the US dollar system in the context of potential package with the United States. Specifically, these stories were based on an internal Kremlin memo that Bloomberg said outlined areas where Moscow and Washington could cooperate economically, including possibly returning to using the dollar for certain payments. So Bloomberg's got wind of a memo from inside the Kremlin. Really? Do they think we absolutely came over on the last boat? I'm not joking, and that's what hit the wire from Bloomberg and Reuters, right? It's market manipulation. It is market manipulation, honestly. I don't know how they get away with it. I do know how they get away with it legally. But is it right? No, it isn't right. Bloomberg got hold of a memo from Moscow. No chance. Crucially, that was not confirmed as actual dollar buying in the market. Crucially, that was not confirmed as actual dollar buying in the market. There was no official statement from the Bank of Russia showing it was purchasing US dollars. How could they at the moment? And no hard data released that matched the narrative of active foreign exchange intervention by Russia. So where's this reporting coming from? So in other words, the headline implied Russia had already started buying dollars, but that claim was not verified by primary data or by Russian official disclosure. It wouldn't be. It just wouldn't be. In fact, Reuters' own coverage noted the report was citing it couldn't be independently verified. But the markets reacted on the possibility rather than the fact. Well, I could make any rubbish up now. I could say, Shanghai's not closing this week. Shanghai's, actually, they're going to open up the exchanges because they don't want the commodity markets to be manipulated. So I can't verify it, but I think I saw a memo or I heard somebody say. So, forget that. It's absolute nonsense. But the markets would move on it if it came from the right sources, i.e. Bloomberg and Reuters. Why this kind of thing happens, financial news outlets often report based on sources familiar with the matter. How many times do we hear that? Or internal documents seen by journalists. From the Kremlin, I'd like to meet the journalist who can get inside the Kremlin and see them documents. You know, that can be real insight, but sometimes the information is preliminary, internal, or pure speculation. If nobody with direct access confirms it, the headlines can, overstate certainty, and nobody could confirm that. If you were going to come out and put your name to that, if you were inside the Kremlin, who's going to put the name to that? It'd be your career over. You'd probably end up behind bars in a Siberian labor camp. And that's traders then, the price moved on the headline before it's proven, and that's what seems to have happened here. It's not what seems to have happened, it is what happened. So the takeaway is this: Bloomberg and Reuters didn't have confirmed evidence of Russia buying dollars. They just didn't. What they had were preliminary reports about internal discussions or proposals. So they say, nonsense. I don't even believe that. The market reaction was real. We saw it. But the underlying reported fact turned out to be not confirmed. And in many interpretations, not true as an executed transaction. They were not buying US dollars. But the market moved on it. The bond market rallied, interest rates dropped, and the dollar went up. All negatives for commodities. That's why when many analysts and traders later corrected the positions, we got to move back up because of headline risk. The risk that the headline says more than the underlying action supports, it's a well-known driver of volatility, especially in the FX markets, and the commodity markets, and that's what it was all about. It was all about putting the brakes on a move that was going slightly higher before Shanghai was going, onto the holidays. Because there was, before Shanghai closed for the weekend, there was selling in Shanghai. Excuse me, and that's why that's why silver dropped in dollar terms on the Shanghai exchange. I think it closed out before the holidays to $81. Not unexpected, not because there's weakness in the need for silver, purely because traders do not want to be in a market that is closed for a week when volatility is like it is. If you were a buyer, I'm going to say, I always say, if you're Samsung, you're not bothered. You're not bothered if you're in the market and price moves all over the place. You don't care. You want the metal. To you, it's inelastic. You don't care. But if you're a speculator, or if you're somebody who's building a position maybe, do you really want to be in a market that's closed for a week? And if you get any major moves, you're stuck. You cannot adjust your position. So it's not surprising that the dollar price of Shanghai silver moved down to $81. The problem that they were having was on Thursday, if you look back at it, let's go and have a look at the daily market on silver. So last Thursday when we had the move down, Shanghai closed at $81, remember. Silver before the move down was following my white trend line there. And it was at $82.86. Now that means, in theory, silver on the Comex was more expensive than it was in Shanghai. And you can't have that. How do you get it? Like Chris says, it slowed down. It slowed down. I'm assuming you're talking about the price now, because it certainly didn't slow down on Thursday. That's when we got the drop down to $73.95. Now, once we realised that it was a load of rubbish that Russia, Chris is saying, yeah, that slowed down a little bit, mate. But you can see that once we realised it's rubbish and they got the move down quickly, which is what they needed. How do we get it down? We put out false news, fake news. Did the job though, and then we couldn't get recovery back above $80 then, so it's job done. So Shanghai closed out slightly above where the Comex is. All through Reuters and Bloomberg putting out a story that could never be true. But the algorithms that follow the news that breaks, they just see Russia, dollars, buying. What do? Buy bonds, buy dollars, starts moving the market, the dollar goes up, commodities come down, job done. All through fake reporting, and they get away with it. They get away with it, and they'll do it repeatedly. Absolutely repeatedly. When we got the move down on the final day of January, what happened? There was trading going on behind the scenes. Spot silver, they had a technical malfunction, so there was no trading. You couldn't make this stuff up, but it's this is what they do. They will do anything anything to keep that price under control for as long as they can. That's why this week they will drive this price down, in my opinion. Drive it down, get the speculators out, maybe get a few more contracts under the belt in the 50s, in the 40s if they can. And then see if they can liquidate some of the longs, stop them taking delivery. I mean, deliveries that are coming out of the Comex, they are into the millions. They're getting quite extreme. Yeah, so the other thing I wanted to talk about, so last week we had the false news from Reuters and Bloomberg that Russia was moving into the markets to buy US dollars. I don't know. It moved the market, but how were they going to do it? They're not in the SWIFT system for a start off. If they want to buy dollars, they'd have to do it through a third party. Who's going to do that? Nobody. So it was a load of rubbish, but like I said, it moved the market. The other thing that I wanted to talk about, do you know when all this stuff that's coming out about a certain island and a certain billionaire playboy? I'm not going to say it because I don't want my live stream to get stopped or anything like that. We all know who I'm talking about. All the news that's coming out, the royal scandal here in the UK. If you need a distraction from it, what do you do? What do you do? Chris Ryan says, yep, you know who I'm talking about. Perfect. So what do you do? What you do is you create a distraction. What could that distraction possibly be? And how do you benefit fully from that distraction? First of all, you make it big enough so that people aren't worried about a certain individual and who was visiting an island. Because if people are worried about what's going on in their own lives because of, you know, how do I say this? You create a distraction that directly affects you. Suddenly, you're not asked who was on a plane. You're thinking, oh my God, have I lost my job? Is my bank going bust? They'll create distractions. But the ultimate distraction, and I saw this headline this afternoon in the UK, it came out at 4:43 in the Telegraph. Ollie Stone says, the Isle of Fernando. Yeah, no, not that one, mate. You're thinking of a different island. There would have been young ladies there, but not by choice, I don't think. But, right, don't get me into that. I don't want to be getting my live stream cut off. So, 4:43 in the UK this afternoon, reported in the Telegraph by Lily Shanaga. Barack Obama, aliens are real. Okay. Why bring that out? Why bring that out now? So I'll read the article to you and just see what you think. Not verbatim, but Barack Obama has said aliens are real, but insisted that none are kept at the top secret Area 51 military base in the United States. In a podcast interview, the former president became the first US leader to affirm his belief in the existence of extraterrestrial life. Chris Ryan, you've got it. Diversions. All smoke and mirrors, mate. Too damn true. Affirms his belief in the existence of extraterrestrial life. When asked, are aliens real? Mr. Obama replied, they're real, but I haven't seen them and they're not being kept in Area 51. There's no underground facility unless there's this enormous conspiracy and they hid it from the President of the US. Well, I can kind of believe that in a way. And the reason that they do it is because it then allows the president to, he has got a genuine case of plausible deniability. In a wide-ranging talk with Brian Taylor Cohen, a left-wing political commentator, Mr. Obama also described the Trump administration as a clown show and compared the behaviour of Immigration and Customs Enforcement, ICE, to that of a dictatorship. Area 51, the Air Force military base in southern Nevada, created during the Cold War, has long been rumoured to house aliens and unidentified flying objects. Mr. Obama was the first president to mention the base publicly. It was only officially acknowledged by the CIA in August 2013, despite having opened in 1955. In 2019, more than 1 million people signed up to join an event made in jest by a Facebook user calling for the facility to be stormed and aliens found, although only around 150 people actually turned up. So they're trying to ridicule it a bit now, aren't they, you know? Previous presidents, including Bill Clinton and Jimmy Carter, have discussed the possibility of alien life, while Mr. Trump has expressed scepticism, but added that anything is possible. So, a bit of a distraction, and this will be taking up pages on Twitter, on TikTok, YouTube, you know, that'll become, because ultimately, the outrage about the certain person and a certain island, yeah, it's an absolute terrible thing in that, but people have short attention spans, and suddenly, it's today's news, it's a big thing. Tomorrow, it's chip paper, as I said the other day. So, it's something to talk about in that, but people, are they really interested in it? I think at the moment they're interested in keeping the jobs, trying to buy groceries, and that's a little bit of drama that they listen to. Who's next on the list, you know, that kind of thing. But they don't really give a shit, I don't think. Pardon my French. But did you notice when, and it all went quiet, do you know before President Trump got elected for his second term, did you notice that in the press, there was a lot of press about unidentified flying objects, and they were putting, officially, NASA was putting out footage of UFOs that pilots had taken and all this, and suddenly there was all this UFO stuff and all of these planets that are coming towards us, and you know, and as soon as the elections are over, it kind of dies a death, doesn't it? You know, right? Yeah, we've distracted people a little bit with all that news, and yeah, we'll move on to something else now. Well, this makes me wonder why, and I'm not saying everything ties into silver. You know, you get some people that are absolutely obsessed with silver, and silver is going to bring down the elite. Silver is going to bring down the banks. Silver is going to do whatever you want it to do. Don't get me wrong, silver is a big Achilles heel of the banks. However, when you can change the rules, to suit you and to suit your narrative, to suit your trading, is it really going to bring down the banks? Did it bring down Bear Stearns? Possibly, you know, they had an awful position, and it was taken over by JP Morgan. But ultimately, there's other things that were going on there. Silver gets the headline, but you know, Barings Bank, an institution for how many hundreds of years. You know, Bear Stearns and all of this, and the meeting over the weekend, and was it all to do with silver? A lot of it was, yeah. And it was a horrible position, but there were other issues as well. But if silver's your thing, it's easy to jump on it and say, it was silver. That's all it was. There was no other issue apart from silver. Well, if that was the case, then, you know, other entities would have rather than the financial system coming within hours of collapse. You don't let it get that far, do you? You do other things. You can change rules. You can. And I'm not saying silver had nothing to do with it. It most definitely did. But was it the only thing that brought down those banks? No, I don't think it was. Definitely don't think it was. And the Comex now. Do I think the Comex will be going in 6 months, 12 months? If I had gun at my head now and somebody says, will the Comex still be trading as it is now in 12 months' time? You'd be a fool to say no. You know, is there a chance that it won't be? Certainly there's a chance. There's always a chance of force majeure or, you know, something going completely wrong and it shuts down. And maybe that's what they want. Maybe that is what they want, and ultimately they will become true price discovery for silver. That's what China is working towards. They've also got 70% of the world's silver, so I think it's 70%. So if they can control price, then they will do. But is the Comex going to be going in 12 months' time? More than likely, yeah, in my view. Is there a chance that it won't? Definitely a chance. If we come to the summer, once we get silver to 150, for me, that's the launch pad. If it then starts moving to 200, 250, it can do that quickly. Do you know, just read what Chris says and I'll tell you something else. Thanks for the live, much appreciated. Got an early morning. Be back for London opening. Well done, mate. Thanks for joining me, Chris. Really appreciate it. Good to have you in live chat. You go and get some rest, mate. I'll give you a shout if anything happens. Yeah. If I forgot what I was saying now. It's been a long day. If the Comex, if this, that's it. If the silver price goes to $250, can the Comex handle that? And you would say, oh my God, the traders, the shorts, they're going to be massively underwater at that stage. Well, yeah, they are. But that's not the Comex. The Comex, the Comex is the exchange. Like people say, the LBMA is going to go broke. The LBMA is the exchange. The LBME, it's the exchange. It's what the traders use. It's where the brokers trade. They don't actually, in theory, they don't actually hold metal. They are the exchange. They are the intermediary between the buyers and sellers through the brokers. So the exchanges, they make the rules, but they don't actually, in theory, hold silver. There's custodians of the silver. I mean, on the Comex, what is it, JP Morgan that hold the silver for PSLV, is it? I think they hold some of the silver there. Do they hold some for other entities as well? So it's not quite as simple as the exchange going broke, if that makes sense. But and the other thing is, getting a little movement now we've come to 1 o'clock. A little bit of downward movement. That little trade I put on earlier is still floating around at 130 quid. I forgot about that. 129. It's just come down a little bit. Yeah, if you think what would the market look like if silver was at $250 an ounce? I'm just getting distracted. Have you noticed this up on the top right hand side there? The yen is just weakening a little bit against the dollar. It's well above VWAP now, and it's possibly heading towards 153.50. Dollar's strengthening a little bit as well, the dollar basket over here. Could see the dollar basket going up to, what, 96.85. That'll put some downward pressure on commodities. What a surprise. But now, this time of night is when we would normally be seeing China getting ready to come online. We don't have that, do we? We don't have Shanghai, that elastic that holds the spot silver in London and the May 26 futures contract. It's not holding them. Chris says, take care, see you soon, mate. Yeah, take care, Chris. Sleep well, buddy. We've not got that elastic holding the Comex price to ransom slightly. Dollar basket is rising, and that's mainly due to the pound against the dollar is pretty steady at 136.37. It's the yen that is weakening. So yeah, if silver was at 250, how would the Comex cope with that? Well, in theory, this is the way I view it. If it's an orderly move up and a steady move up, you're gonna have sellers who are happy to sell at $250 an ounce. You're gonna have First Majestic; they'll be happy to sell to refiners. And people who really need the metal at $250 an ounce, you're going to have to pay it. You're going to have to put prices up. You're going to have to... The people it's going to affect are people who've got contracts. That's what one of the issues is. And that's where, if you could do a search and find out who's got a contract to sell silver at... There's people who will have contracts, I'm sure, to sell silver at $30 an ounce, so many million ounces until a certain date. I'm sure that contract will exist somewhere. Maybe it's somebody who's not necessarily trading Comex, but they've done a deal with a mining producer, with a producer to go direct. We know that happens. We know that certain silver users have gone direct to mines, and they've actually paid to take the concentrate themselves, and they've paid to take it to refiners and get it made into doré or whatever they're going to do. So that metal never even sees the light of day of an exchange. How long is that contract for? When silver was at $22 an ounce, if somebody was prepared to pay $30 an ounce, would a miner take that price? I'm pretty sure some of them would. So, there is people who will be well underwater, but the majority, I'm pretty sure, if you've got sellers at $250 an ounce, which you will have, you will also have buyers at $250 an ounce. One, because they need the metal. Yes, they'd sooner buy it at $50 an ounce. Yeah, they'd sooner buy it at $100 an ounce. They'd sooner buy it at $150 an ounce. But if you need it, you need it. You're not going to close production plants down because of silver going to $250 an ounce instead of $100 an ounce. You're just not. If you do the maths of the components that silver goes into, solar power might have a little bit of an issue, but they'd have to increase prices. Maybe then government subsidies come in because everybody's got these targets, 2030. You've got to hit these targets. If silver goes up, government will subsidise. They would have to. So these things that you look at silver and you think, could it really go that high? How are people? It will have to. It will have to, because peak silver is pretty much here. If you want to increase silver production or available silver, one of the easiest things you can do, you can try and thrift. You can try and find ways of maybe using a different material, maybe using slightly less. But everybody who uses silver is pretty much, as far as I'm aware, they pretty much thrifted out all that they can. And they've tried using other materials, but they just don't work as well as silver. It's a fact. They just don't. So, they are stuck with silver. So what do? You've got to suck it up. The main problem is not going to be price. The main problem is going to be availability. So $250 silver doesn't mean people will stop buying silver because the price is too high. You're just going to have to suck it up. Simple as. And if we need more silver, which we do, in the future, we are only ever going to need more silver. So what do? We need to bring more silver production online. Not that easy. If you found a reserve of silver now, best estimates are, if you were to open up a mine and get producing concentrate and and get it to refiners, you're not looking at 6 months. You're looking at sort of 10 years. You're looking at 10 years, and that's if they get help with permitting, which that can be sorted out with the stroke of a pen. But the rest of the issues around setting up a mine and finding new reserves, best estimates are the quickest time is sort of 10 years. You're probably looking more like 15 years. And a lot of the silver that comes online is the byproduct of copper. And let's have a look at copper. What's copper doing? It's had a move up, but it's not exactly... It's not exactly going through the roof, is it? And we had a look at the... and when you think silver can't go up to these supposed astronomical numbers, let's have a look at what happened to... look at this in the nickel market. Look at that for a move. And that wasn't over the full month. That was in a few days. So it went from 24,464. I think that's per ton. And there was one trader in, I think it was in China, who was massively short. Massive short position. Didn't have the material. And in the space of days, it went from 24,464 up to 100,000. And that's where they said, halt trading. Halt trading. There's no metal, halt trading. And what happened? Did they call force majeure? Did they say, no, you're going to have to deliver it? Well, you can't. You're going to be bankrupt with humongous losses. What did they do? They changed the rules and just said, hang on a minute, whoa, everybody, calm down. Look, take your trades back and we'll try and reopen the markets. Really? That's what they did. They got away with it. It worked. I mean, I think even now, there's still court proceedings going ahead because people are saying, we made a contract, we made a deal. You can't just turn around and say, actually, everybody take the trades back and we'll reopen the market. They tried a couple of times to reopen the market and it just kept wanting to shoot up. And eventually, I think people realise there's no point. We ain't going to get the metal. We're not going to get the benefit. And it's currently we're back at 17,005 ounces. I think that's per ton of nickel. But look at that move. In the space of days, from 25,000 up to 100,000 in days. So when you think that it couldn't really happen in silver, could it? Of course it could. What would they try and do to stop it? They'd try and do what they always do. They will increase margins. However, if people want the metal, they're not bothered if margins get increased. Because ultimately, they're going to be applying for a warrant anyway, where you've got to stump up the cash. So they can increase margins to 100%. It doesn't matter. If your intention is to take the metal, put margins up to 100%. It doesn't matter. If you're going to be applying for the warrant, and you're going to be taking from the registered category, you're going to be stumping up the cash anyway. It's only the speculators that will come out of the market. The problem they're going to have is there's pretty soon going to be less speculators than real buyers. And ultimately, that's not what the Comex was set up to do. It wasn't. It was for people like, bullion dealers, pretty much people like Andy Sheckman's, his outfit. If he buys 1 million ounces, he'll hedge 1 million ounces. Rightly so. Like he says, you've got to do that because if the price comes down, you need to be hedging that price volatility. The problem they've got is, as prices going up and up and up, and as margins increase, they're having to stump up that extra cash you eventually get to a point where if your short is coming up to where your buy price is, eventually you'd have to close that short out because it becomes counterintuitive then. But if you get a fast move down, you're naked on all of your inventory. So it's an absolute nightmare for, for bullion dealers and coin dealers and what have you. So do you know the best thing as a trader? This volatility is great for making money, but if you want to make some real wonga, what you want is a slow, steady move up and to the right. What I'm talking about is, what's silver at now, the futures contract is at 77.33. So if you can have it by, say, end of play tomorrow, you put you put a long on now. I'm not saying I'm doing this, but I'm giving you an example. You put a long on now at 77.34. By the end of play tomorrow, it's moving up and to the right, nice and steady, and you're at $78. You have a little bit of a pullback to 77.90, then you start that move up again, and the next day you're at 78.50. And this is where you can start building into your position and get a real strong position. And yeah, you'll get some little pullbacks, but ultimately you're going up and to the right. And that's what I found is the best way to build a real strong, profitable position. If you get a quick move up now, the market's moving up too quick really for retail traders to be making the most of the move. You know, it jumps from 77.38 now, and suddenly within an hour it's at 79, then you're at 81, and you kind of you may be adding to your trade, but you're not fully utilising the cash that you've got available because you're thinking, is it going to pull back? But no, it keeps going, and then it's $3 further on than where you expected it, and you're playing a little bit of catch up, and it doesn't allow you the time to build that strong position that becomes ultimately a real healthy, wealthy position. So we need volatility out of the market and a slow, steady climb into the right. It's perfect for making money. You know, cash. We know it's cash, but we all say money, don't we? And that's the best way a market move can go in your favour. And it's like if you're going to short, you don't want really that massive flash crash. It's good for the Comex and the shorts because they'll target people's stops. We know they do it. Liquidity sweeps. It's not anything that's, it's not conspiracy. Or do they hunt people's stops? Of course they do. The exchanges, they can see where people's stops are, so they can actually target the stop. Should they be allowed to do it? I don't think they should. Is it breaking the law? No, not at all. They've got an edge and they use it to their advantage. So yeah, hopefully, if we can get this volatile week, I'm just praying that we go down to $44. My ideal week would be that by Wednesday, we're pushing down towards $44. We hit $44, we can get in, start building a position from $44. And by the end of the week, we come back up to roughly where we are now. So like I've said, Shanghai comes online, everything's as you were, and then we continue from there. Shanghai will start moving up. February is never a good month for commodities, really. I think 70% of the time, February is flat or negative. And it's no coincidence that it's when the Lunar New Year in China is, and we start ramping up price-wise in March, April. Then we come into the summer months, and then sometimes we have a little bit of a tail off towards the end of the year. Sometimes we have a little bit of a move up towards the end of the year. But historically, February is not a good month. So that's why I'm thinking at some point we are going to get a move down. That little 1 unit trade I've got in is still going. Where are we at now? It's 158 quid. So what I'll do, I'm going to wait until just after 1:30, when in theory, Shanghai should be coming online, the whole of China, even though it's closed, because there may be other people trading on different platforms than Shanghai. So we might get, although Shanghai is closed, there are other platforms that you can trade on, obviously. It's going to be interesting when the Comex should be online tomorrow. It won't be. Is spot going to lead the way in London? Who knows? Are people going to drive spot price up before Comex comes online for that wallop? I do hope so. I genuinely do. I mean, if anybody's long, I obviously, I don't want your trades to go against you, but ultimately I can only go off what I'm trading, and I'm hoping for a short position to come into effect, a sell-off. I'll try and make money on the way down if I can. Anything that I can short down to 44 is a bonus. But ultimately, I want to be going long from around 44. I'm not tied to that 44, by the way. It could be $50. We could go to $49 and then start moving back up. I just think if you go to 49, why would you not go down to 44 where there's a little bit of liquidity there? So we shall see. It's certainly going to be an interesting week. I think we're going to be taking plenty of Pro Plus, the caffeine tablets. I take them when I'm driving any distance and you feel a bit drowsy. Pop 1 or 2 of them in, give it 10 minutes. Good to go for another couple of 100 miles. I've not done any shout outs either. If you haven't done so already, please hit that subscribe button, ping that notifications bell if you can give us a thumbs up. That'd be superb. We've not got a lot of subscribers. I think we've got to 30 now. So as I keep saying, quality over quantity. But it's not. I'm not bothered about getting thousands of subscribers and all that sort of jazz. I just want it to be a channel that people can look at. We've also got the Facebook page that's up and running, and ultimately that Facebook page is going to become a bulletin board. I've said this before, we can't be an intermediary because I'm not having any liability should anything go wrong. But if a buyer of metal doesn't want to pay high premium and a seller of metal doesn't want to pay under spot, the two can come together and get a happy medium where they're both happy with the deal and they both get a better deal than if they'd have gone to a bullion dealer. Facebook's there. People can chat on there all they want. We're not an intermediary. We have no legal obligation to anybody, but if people want to chat and set up their own trades with each other, who am I to stop them? I'm not the police. That one unit is pushing towards £200 now. Go on, keep going. I'm going to close that out, I think, once I get to 1:30. I'm going to try and get some sleep unless there's some real movement in this market. If we start moving towards the top of the Bollinger, towards that 50-day moving average, we could try and suck a few longs in, up to 81.32 on the 200-day, but I'm pretty sure at some point we'll be getting that move down. Now, if I'm thinking that, maybe a lot of people are thinking that, maybe the market's going to go, well, actually, we're not going to play that game. We're going to head back up towards $100. Would that surprise me? No, not at all. Not at all. But then what we'll do is we'll adjust our thinking and we'll follow that move up. But I just don't think they're going to miss that opportunity to get a few weak hands, get a few institutional buyers out of the market before delivery is due on the 27th. Sorry, not due, but when the contract ends on the 27th, if they can drive it down and either get people to close out maybe take a cash alternative with a bit of an incentive instead of taking metal, I think they will take that opportunity. I know I would. So they're not in this. They're not going to do the traders any favors, are they? You know, the retail, just because they may be long. Actually, that's a point. Let's have a look at client sentiment on. I mean, look at that. Client sentiment on IG, May 26 futures contract. 85% have long positions, just 15% short. That's a one-sided trade. And the thing is, you only need to start that little move down, and that'll change quickly. And it comes back to the analogy I made the other night. If you're with a wheelbarrow at the top of the hill, you only need to start giving it a little bit of a push, and momentum will start bringing it down. So you're not having to use a load of contracts to drive it down there. The market will do it for you. It won't last, you know. Eventually you'll need to buy them back, but if you can buy them back at a lower price, why not? But yeah, client sentiment, 85% long. Ollie Stone in live chat, what are you saying, son? What are you saying? Are you going to close your long position before 1:30? No, I'm not, mate. I'm not. I think there's a chance. I want to see what happens at 1:30. Obviously, we're not going to have China coming online, but there are other avenues where they can get into the markets and do some trading. So maybe volatility isn't going to be as big as we think straight away. Maybe volumes won't be as low as we think. What are the volumes on the hourly chart at the moment? Yeah, we're pushing towards 5. Midnight till 1 o'clock, we were pushing towards 5,000. Coming up to 25 past 2.5, so we could see another 5,000 hour, 5,000 contracts on the hour. However, if we sort of see 7,000, 8,000, we'll know that China's not necessarily, although it's an official holiday, they're not necessarily having time off. And they'll be trading through different means. So I do think, Ollie, top of the Bollinger's at 79.30. I could see us going there. If we do go... I finally closed my positions from the other day at a loss. No shorting. Okay, your shout. Your shout. See what happens at 1/2 but I do think we might go higher slightly at 1/2. I don't think we'll go to 81 if we do, not for long, because that's where Shanghai closed out. So that 200-day moving average on the hourly chart at 81.34, that might be as high as we go, but it'll suck a few longs in. What was you thinking, Ollie, of going short now? What are you thinking? What are you seeing there that makes you think we're going to come down? You might be right, but I think we could be going slightly higher. Maybe another $3 before a move down. Just pushing up towards that 20-day moving average. If we break through that, next stop is top of the Bollinger at 79.20. I'm looking down there for my clock. It's right in front of my eyes there. 1:26 and 20 seconds. Do you know that after that initial move up and then that move down where we had on the open, we went to, call it $79, and we came down to a low of, it was lower than that, I'm going to say, because I got in at 75, 75. We came down to $75, call it. So in that first hour, we had a $4 whipping around session. Ollie says, I was too confident in the decline. Opened a short. That'll be a short position. Opened a short position about 20 minutes ago. So that would have been. Yeah, we're getting that move up now. That would have been at 77.30 were you in at? Something like that. It's a bold move. It's a bold move. We're getting a little bit of. I've got a trend line here on spot price that it's butting up against, and it's tying in as well with the 50-day moving average. If we do go above sort of 77.53, we could be going up on spot to 78.73, which is with the spread for the futures, which is at what 60.50. That'd be taking us to 79.36. 50-day moving average is coming down, keeping it under $80. I certainly wouldn't be panicking if I was you, Ollie. Hopefully it's just a small tentative short that you've put on. At this stage, I don't think anybody, I certainly won't be. Well, you can see there I've just got one unit. I just opened one unit long until we know exactly what's happening and we can see what sort of volumes and what sort of liquidity we're actually seeing. Volume's a little bit better than I thought, I've got to say, but I think we could see a little bit of a quick move up now. We've got 35 seconds before we're, in theory, China should be coming online fully. The question is, are they on holiday? Are they sleeping? Are they having a lie-in? Or are they trading? My money is they'll be trading. Just because I would be. And I just know I would be. You can always take a week off, can't you? When, later on in the year. Make it up to yourself. That dollar's weakening a little bit as well, which is helping the price move up. Yen is strengthening slightly. It's at 153. Gold's moving up to the 100-day moving average. Well, there we are. In theory now, China should be online. Seeing a little bit of an uptick in volume. Little bit of liquidity there, but nothing. What are we going to see? Half past, we're probably going to go to slightly higher, maybe 5,000-6,000 contracts. Unless we get something bizarre suddenly happen. Something that's going to trigger the algorithms, and we could end up at 7,000 contracts, something like that. It's not looking like we're going to get that though. But that could just be lulling us into a false sense of security. There's that little trade, 3 minutes, 173 quid on the whip around. Original poster, are you still trading or are you asleep? Good to see Ollie Stone production still awake. Yeah, what are the expectations from this week? Hopefully, if it goes the way I hope, we'll be looking at 1.2 million. Is it going to happen? It's highly doubtful. But if things go to plan, we could be on for a good week. And that'd definitely be my best month. I did a video the other day what we were up to a month. I think we're at 40 odd thousand so far for February, which is a good month. Saying it's normally a little bit quieter. Ollie Stone from Half OP. What do you mean? From Half OP. Just starting to see a few more ticks coming in, but you can't see that there's any particular selling strength or buying strength, you know. $77.80, give it a take. $77.90 call it was a top for the hour. Currently $77.65, so it's pulled back a little bit. There's nothing. There's no move that's kind of giving us any clear indication. The one above, that is Harvey's question. Oh, Ollie Stone, if trend reverses to the downside, what side would you cut your losses? Well, I wouldn't really have any losses. Are you talking about that little long position that I've got on, that one unit? Because I'm not really bothered about that trade. That's just keep the account ticking over. So I keep forgetting about it, to be honest. I shouldn't do, because it's a lot of money. So don't be ignorant, Jimmy. So it's there. I'll keep an eye on it. Yeah, if trend reverses to the downside, what side would you cut your losses? Yeah, that's the one he was referring to. I don't know. I'm not, like I said, I'm not. Don't get me wrong. What is it now? 182 quid. 182 quid is a lot of money. In the grand scheme of things, I'm not bothered about it. If I thought we were going to suddenly get a move to the downside, I will just close it out and start building a short position. I don't want to force it open so that stays a long. I'm not bothered. I hope that answers you. I hope that answers your question. Years and years and years ago, I would have been delighted for that. I'd have been jumping around. And don't get me wrong, I realise that it is a lot of money. But with the plan that we've got for this week, we want to be getting into the tens, hundreds of thousands. And if it doesn't happen, it doesn't happen. You know, I won't lose any sleep over it. But if it does happen, I'm prepared for it. You know, I'm prepared to trade that now because I've got a plan of where price I want it to go, where I think it could go. If I can maximise the move down, it then gives me more firepower to start building on the way up and building quicker. So we can build a bigger position. Will IG get funny over the size of the position? I don't think so. They never have done in the past. Like I said, the biggest position I've had is over 200. I think it was 200. I think it was exactly 200 units. You know, defining. It's just sort of, you got to be a little bit careful because they'll start asking for a little bit more margin as your position grows percentage wise. But then as the position's going up, it's making money it's increasing the equity so you can fund the position. So it's like a snowball. The bigger it goes, yeah, you've got to pay more out, but you've got more money in equity, available funds. So it becomes a little bit self-funding. It's only a position if you get a sudden, it's only an issue as a position size if you get a sudden drop and you've got to start funding the drop or you close positions out. But if you've got to close positions out, it's not a problem because they should be well into the money anyway. But it's just at that size, you get a tick. Every dollar move is like £20,000. If you get a $10 move in a day, $12 move, you're looking at £250,000, and it does make you sit up a little bit more and take notice, and you've really got to monitor your position. Because if you do get a fast move down, if you can close out, if you can catch the move and close a percentage of your position out, you can make sort of 150,000 and then ride it back up to where you were. The market's not really gone anywhere, but you've increased your equity and your available funds. You've increased it by sort of 150,000 and the market's not done anything. So it's a case of being able to stay alert. You know, if you can stay alert and you can manage your position and manage the moves, you can make decent money without the market really going anywhere ultimately. You know, when you look at the change that occurred last week, when the week closed out, we were within a few cents of where it opened up. And yet we had all that volatility. We had volatility long, we had volatility short, and yet we closed out within a few cents of where it opened. The ideal scenario is if you can make money whether the market goes up or goes down. That's another thing that I will do at some point once the position gets big enough, because we'll hedge. We will, very often I'll go short a futures contract, but I might go long with spot. And as the spread between the futures and spot converges, regardless of which way the market goes, you end up making money. But until you build a big enough position, personally, I don't bother with that. I don't sort of go long futures 5 units and then hedge on spot short for 4 or 5 units. I don't do that. I don't feel the need to with the positions, with that position size. As it gets bigger, if you don't want to close out, yeah, you can hedge. And it's even better if you can go into backwardation. That's even better, because if you are in the spot market overnight and you get the carry cost, very often they will pay you to stay in the market if you're in backwardation. So rather than you getting a carry cost charge, you actually get paid money just to stay in the market and keep the position open, which is even better. But I think everything's pretty stable overnight now. I think we'll just go quiet. We've got India that will be trading as well, but I don't think they're going to take over. They're not going to have their own volume, and they're not going to have China's volume as well. It's not going to work out like that. I think the next time this little trade, I think the next time it goes up towards 77.88, something like that, I'm going to close that out. Then I'll stop this live stream. We're not going to get that much volatility this evening. It doesn't look like. We had it initially with that $4 move up and move down. So that'll give us around 400 quid for the night's work. So it's not been the main thing was getting the live stream out. The first one we've done. So that's the main thing. And if we've made a few pounds as well, it all goes into the kitty. But if we're going to make 100 and if we're going to make 1.8 million, I worked it out. We're going to need like 300 odd thousand per day, and unless volume picks up tomorrow, it's going to be difficult with the Comex offline. We're going to struggle to do that. But if we get anywhere near it, it'll still be a good month, or it'll still be a good week. Live chat's gone quiet. You still got your short on Holly Stone production. What price did you get in shorting at, Ollie? Just see if anybody sent me a message. I've just got a message off my daughter. I don't know what that is. I'll have a look at that after. What's that? Total investment holdings. Just my daughter just said I made £3 since May. £3, it's a profit. Ollie shorted at 76.96. £76.96. And that was hopefully on the futures market, the May contract. So you were just at VWAP, just under. It's not a trade I'd be worrying about if I was you. I mean, we might go a little bit higher, but I don't think we're going up to sort of. I don't see how we go up to my 7-year trend line there. You know, the moving average, because that's 83.39. I think don't see us going above where Shanghai closed out at. I just can't see that. Hopefully everything's all right with the live stream as well. It's saying everything's all right with it, so fingers crossed. What's that? 44. I can actually see. It's about 20. There's about a 20-second delay between my stream and what goes out on YouTube. Just refresh that. It's a little bit different than my other channel. Catch it live first. But because this was the first live stream we've done, I think they want to make sure we're not doing anything nefarious, or we're keeping a pretty tight rein on the channel. But I don't think we've mentioned anything tonight we shouldn't have done. We certainly didn't mention anyone by name on certain islands. We've not mentioned any illnesses, so we've been pretty good tonight. I'm just hoping that volume's okay. Maybe I need to adjust that down ever so slightly on the filters. On the limiter. Maybe testing 1 2 3, testing 1 2 3, testing 1 2 3, testing 1 2 3, testing 1 2 3. How's that? Hopefully loud enough. Put it at 27.5 on the limiter. What do I want to do? Just so I've got a target, I'm going to try for 400 quid. So I had 173. That's £27, £26.50. 226.50. Close that trade out. £400 for the night. I'm not going to leave it on overnight just because I'm going to try and keep my eyes on it overnight while I have a sleep with kind of, I want to be closing it out to them putting shorts on, and it just becomes a bit of a, it becomes a pain that you don't need. Could go a little bit higher. But the higher it goes, the better price for getting in that shorting. What's the time over in the USA now? Almost coming up to 2 o'clock. In the UK, so that'd be 10 o'clock, 9 o'clock in the USA. My mate, a geezer from Connecticut, he's a stalwart of Catch It Live First. He'll be getting his Horlicks ready. He had an early start today because Bispo Krakow were playing. He joined me in live chat and it was an 8:30 a.m. kickoff. In the US, he was there though. He was there. Strong cup of coffee and a cigarette kept him going. Frankie James won't be in live chat at this time of night, that's for sure. She'll be in the land of Nod, and I don't blame her. Starting to feel a bit tired myself now. I've done a lot of streaming today as well because I did the Wisła Kraków match away at Grodzisk. The Polish Betclic one. Anyone who is watching from Poland tonight, you're welcome. Dobry wieczór, nie mowy po polski, angielski, dziękuję bardzo. Wisła Kraków, jazda. Back. Yeah, we got a draw. Still top of the league. And then after that, we did the second half because they overlapped slightly. The mighty Wigan Warriors away at Castleford, round 1. Red Super League. Came away victorious. Decent performance as well. Looking good, Wigan. We didn't have a repeat of the opener from last season, the 25 season, where they had that historic 0-0 draw with Lee Leopards and then lost in overtime. How funny. The season before, in 24, every competition they entered, they won. They won the World Club Challenge. They won the Challenge Cup. They won the League Leaders Shield. And they won the Grand Final. Clean sweep of victories. And yet last year, they won zip, nada, nothing. They got the runners-up trophy in the league. OKR taking top spot. And then Hull KR beating Wigan in the grand final as well. That's how it goes. Heroes to zeros in the space of a season. Well, not quite zeros, but you know what I mean. Right. If I can get this trade over, I'm going to see if we can get it over £200 and then I'll close it out and close this stream. Looks like we might have a quiet night. But I am waiting for fireworks to begin, so I'll be monitoring this market as much as possible. I'll hopefully have a video out tomorrow evening. Don't forget, lots of distractions going on, not just for the markets, but also for other reasons. So have a look at that if you've not seen it. Ex-President Barack Obama. Aliens are real. Next thing we'll be having Project Bluebeam. There'll be an alien invasion coming, or there'll be something. There'll be something. I'm not going down that rabbit hole. We're not here for that. We're here to make some money on the markets. Any more questions in live chat before I end this stream? Feel free. If you are watching this and you think, oh, we should have asked that, leave a comment, because I will be replying to comments. I do read them all and I appreciate every single one of them. So if you missed a live stream and you're watching a rerun of it, feel free to leave a comment. Holly Stone, are you still awake? Any questions before we call it here? Have original poster. Is he still awake or is he in the land of Nod? Still got my party poppers from the Viswa game. Every time Viswa score, we get a party popper on the go. When will we be using it for the markets? What would be the landmark where we'd be letting the party poppers off and opening champagne? That's a good question to myself. I don't know. I honestly don't know. There we are on, we're back to that 77 mark on the futures. We hit that as a close, didn't we, a couple of weeks ago? But we've had all of this volatility, but ultimately the market's gone nowhere. But you can't exactly say we're chopping sideways because we're not. There's biggish moves up, there's biggish moves down. So are we trading within a range? It certainly looks that way. We're trading in a range until we're not, until it breaks that range. And I think at the moment this week that break is going to come to the downside. Can't seem to get higher on that one unit than £191.50. Just under 7 minutes until the turn of the hour. See if we can get it to 200 and we'll close it. My voice is getting ready to go as well. Like I said, there's been a lot of talking today. 2 live streams prior to this one. How long's this stream been going now? 2 hours and 58 minutes. Almost 3 hours. Thanks to Ollie Stone for joining me in live chat. Have original poster. Frankie James. Been my pleasure. Chris Ryan. It's because of Chris we did this stream, actually. He asked if we could do a live stream. I said I'm not sure how, trading-wise, it's a lot of waiting around for a price. Then you put your trade on, then it's a lot of waiting around while you close it out or you add to it. So I'm not convinced that they're the most exciting streams, but maybe people will enjoy them. The viewing figures will say if they're not popular, then we just don't do them and we do the videos. And it's not sour grapes. It's just if there's no need for the live stream video, then there's no point in doing them, really. But there's always something with silver to talk about, isn't there? Whether it's manipulation, where the price is going, who's doing what, how much does JP Morgan actually hold? Is JP Morgan actually long with their own account? Even if the house account is, they're doing some selling, and there's never a dull moment. The markets are so exciting. Maybe not for everybody, and I get that. But personally, it's not just about the market, is it? It's the news around it. It's the waffle that comes out. It's the jawboning to move price, as we saw with Reuters and Bloomberg. Oh, here we are. Oh, we moved up to 194 then, as we've got just under 5 minutes till we hit 2 o'clock. A leaked memo from the Kremlin. I've never heard anything as stupid in all my life. Oh, dear me. It's like somebody soon, we've seen a leak, we've seen a post-it stamp on Xi Jinping's desk. Absolute cobblers, but it moves the markets and that's what it's intended to do. The other big thing with Bloomberg, wasn't it, after Christmas, they're going to have to reprice their index. That's going to put downward pressure on silver. Oh, makes me chuckle. Makes me chuckle. The things that they'll do to move these markets. If there's no liquidity, they'll inject it somehow. News headlines. You don't need to print money. Just put, there's enough money floating around. Just put a news headline out there. Yeah, we keep stopping, don't we, at the 20-day moving average. The other thing is, just looking at that, we have had that move down, so we had the red candle. Call it a big red candle. That's what it is. It's quite a big red candle. We often get tranches of 3 green candles in a row. And that's because you have the red candle, then you have a green candle that reverses the move. You have another green candle, this is on the hourly. You have another green candle that continues the move. And the final green candle extends the move, ready for the sellers coming in and stopping the move going upwards. So you often get tranches of 3 candles. Sometimes you might get 4 or 5. Sometimes you get 7, 8, 9, 10, and they're great. They are great, especially if you've stayed in, because there's plenty of liquidity there as well, thinking that there's a red candle coming, and it doesn't come. But yeah, if you look back through, you often get 2 red, 2 green, 2 red, 2 green. It's just banks trading backwards and forwards with each other. But you sometimes get, more often than not, tranches of 3. 196.50. Get over 200. You might acquire this as well, actually, but I'm not bothered. Like I say, I'm going to stop this stream very shortly. Try and get a little bit of shut-eye ready for Europe opening tomorrow. See what the spot market does. Spotlight is going to be on the spot market in London. Remember, no Comex trading officially until tomorrow evening, which will end up being actually on Tuesday. Money talks. Bit of Neil Diamond. But it can't dance and it can't walk. £197.50. Go on, hit that £200 for Jimmy. Got 60 seconds just until we turn over on the hour. We're going to have a bit of a quick move up. I wonder if we are. Punch through that 50 day, 20-day moving average, sorry, and bring VWAP up a little bit. $30 seconds to go. Where are we going? Let's see what happens on the hour. Do we get a move up? Top of the Bollinger would be nice for myself. That'd give me 79. Give me another 100. I'll quit that. I think I'd sooner have the extra sleep though, to be honest. Sleep with one eye open. Here we go. 4 seconds, 3 seconds, 2 seconds, 1 second. Where are we going? We flicked over. Do we head back down towards VWAP, or do we break up above the 20-day moving average? Well, it's just heading upwards towards that 20-day moving average. Give it a few seconds, and then do we get a quick move up? Yeah, it can't make its mind up. Not a lot of volume, is there? Yeah, we're hovering just over 4,000 contracts on the hour. Right, let's take bit of movement coming in to the upside. Nothing worth staying up for there. Right, close it out. £204. So we've been going a couple of hours, and we've made £377 and 50 pence. That's all right for the live stream, isn't it? Right. I think that's me done for tonight. Like I said, I'm going to go and get some sleep. Thanks to everyone who has joined me. We'll be back with a video tomorrow evening. We'll see how we've traded during the day. Hopefully we've made some money and we don't make a loss. That's not in the plan. just looking at that dollar yen, the yen's strengthening slightly and the dollar's coming down, which is going to be a bit of a tailwind for commodities at the moment. Although ultimately, it doesn't always work that when the dollar basket goes higher, that it makes commodities more expensive. It does if you're buying from outside the USA. If you're buying from inside the USA, obviously it makes commodities a little bit cheaper. So, as a rule, yeah, it puts pressure on, but it depends who's buying. So the two can go up in tandem. You can get a stronger dollar index and a rise in commodity prices. Right, that's me done. Thank you everybody who's joined me. Hopefully you've enjoyed this live stream. They're not the most exciting, are they? But it can be when you're placing trades and closing out and trying to make money. Hopefully if you followed us tonight, we made 300 odd quid. So if you did follow in any of my trades, well done you. Do trade for my own benefit. Got to keep saying that. And we have got the disclaimer. Before I start, just a quick disclaimer. This video is not financial advice and it's not a recommendation to buy or sell anything. I'm a retail trader, not a bank or an insider. On this channel, Commodity Confidential, I share my own trades, my own thinking and how I interpret publicly available information. You should always make your own decisions and manage your own risk. I'll be back tomorrow with a video. Join me for that one. Hit that subscribe button, ping that notifications bell. And if you can give us a thumbs up, that'd be superb. Share the channel, share the stream. I am not AI. I'll see you later on today now. Enjoy the rest of your evening. Enjoy your days at work. Stay safe. We'll be back.